Good morning. It is 9 a.m. here in New York City. Who's ready for Memorial Day weekend? This is Yahoo Finance Live. I'm Julie Hyman. That's Diane King all in for Brad Smith. And here are three things you need to know this morning. Edging closer to an 11th hour deal. President Biden and House Speaker Kevin McCarthy seem to be closing in on a debt ceiling agreement. That's according to various media reports. It seems that any deal could involve a cap on federal spending for 2 years, although, according to the New York Times and Bloomberg, it is still unclear what that limit would be. Reports also suggest any deal could cut $10 billion from an IRS budget increase. The expansion of that agency was part of the president's Inflation Reduction Act. The Treasury has warned it might be unable to cover all of its obligations as soon as June 1st. And inflation once again resisting efforts to slow it down. April headline and core PCE rising 0.4% from March. The latest read on prices gives ammunition to bets that the central bank will raise rates at its meeting on June 14th. Markets had been about even on whether the Fed would pause or hike. Now they're favoring a hike by 0.25 percentage point. Both core and headline inflation rose 0.1 percentage point more than economists estimated, and both of them reaccelerated from March. Core PCE is known as the Fed's preferred gauge of inflation, mainly because it's said to be more flexible than CPI in adjusting to changes in consumer spending. And speaking of consumer spending, the consumer spending story stays in focus with results from Costco, the warehouse chain showing it is not immune to choosier shoppers who bought fewer bulk items last quarter. U.S. comparable sales excluding fuel trailed estimates rising 1.8% versus an estimate of about 3.5%. Total sales also missed projections. Adjusted net income did rise by 14% and beat. Back in February, CFO Richard Galanti warning investors over weakness in big-ticket discretionary items. This is a theme we have seen across the sector from Walmart to Home Depot. So a debt ceiling deal seems to be edging closer, according to various media reports. It seems any agreement could involve a cap on federal spending for 2 years. Joining us for the latest is E.J. Dion Jr., Brookings Institution Senior Fellow in Governance Studies and a columnist at The Washington Post. Thank you so much for being here, E.J. So we're getting these reports and maybe they're getting a little bit closer to a deal here. And you wrote a recent column at what the cost will be, not just sort of in dollars and cents, but from a bigger sort of philosophical perspective, what the cost will be. From what you've seen of this current reporting, what do you think we're going to end up with here?
Well, I wrote that column because I was very worried that almost all of these cuts were going to come out of programs mostly for lower income Americans and some middle class Americans. And it just seemed very odd to me that you are going to have, with all the money that the federal government spent, by narrowing the options of what could be cut to what is blandly called domestic discretionary spending. A lot of those programs, whether in childcare or healthcare or housing, go to people who need the money most. So, no possible closing of tax loopholes for rich people, nothing else but these cuts. If you look at these deals, and you've seen a bit of a revolt this week among House Democrats who were very upset with President Biden for letting Kevin McCarthy, the House Speaker, really dominate the public debate. And the president hung back, didn't say much except that the talks are going well. The news last night about the contours of the deal, if it holds, I think will hearten some of the people who worried about big cuts. It looks like the cuts will be limited to 2 years. There will be a 2-year debt ceiling increase, which, as you suggested in the opener, is central to saving the economy, preventing potential economic catastrophe. By shuffling some money around, taking $10 billion out of the increase that was going to the IRS to increase collections from mostly the best off, they've taken some of the edge off the cuts. So my suspicion is that if this is the deal, Biden and House leaders will be able to deliver enough Democrats for the deal. However, there is a real revolt on the right and far right of the Republican caucus against the deal. And the math is very tricky. What pretty much everybody I talk to says is that if you're going to pass a Biden-McCarthy deal in the House, you're going to need about 150 Democratic votes and Republican votes and 70 Democratic votes. That just barely gets you to a majority. If you lose a few, either on your right or on your left, the deal might not pass. So they're going to be navigating this tricky math right to the end.
EJ, I want to ask you a follow-up question to your point in your column about the poor being held hostage in this debt ceiling standoff. One of the sticking points has been this work requirements piece. And you say this is not a partisan issue, but it seems like the way it's being approached is a partisan issue, whereas Republicans are in favor of this, but the Biden administration not in favor of this. Do you see them reaching some sort of agreement on this particular sticking point?
Right. Well, I agree with you that this is a partisan issue. What I wrote was to describe this as cut programs for the poor and avoid tax increases on the rich. That's not a partisan description. That's what's going on. But you're quite right. This is the final sticking point. And I hate even to use the words work requirements, because these requirements are not designed to help people get jobs. Very few people would get jobs. What they really are is an attempt to build red tape around programs, make it harder for people to access them by putting in these complicated requirements that are labeled work requirements. And the result of them, depending on what they look like in the end, would be that a lot of people who work, who are eligible for these programs, might not get them because they'd have trouble jumping through all the bureaucratic hoops to get Medicaid or food stamps or temporary assistance to the poor. That is where the Biden folks and the Republicans are negotiating very hard at the end. The Biden folks are trying to eliminate or at least minimize, maybe make the work requirements some fig leaf that McCarthy can declare a victory but don't really do much, versus very substantial work requirements. And, I mentioned that 150-70 math. I think a lot of Democratic votes, not just on the left of the party, but a lot of mainstream Democrats really do not like the way these so-called work requirements would work. So I think the administration wants to fight hard to the end to say to Democrats, we tried to minimize these so-called work requirements.
EJ, I've been talking for a few days now about how sort of idiotic this whole process is, right? And every time it rolls around, we kind of shrug and say, oh, here we go again. Is there any realistic way of fixing this for the next time and the time after that and the time after that? Is it just like, oh, this is partisan politics, there's nothing we can do? Or is there actually something that could be done?
Right. We shouldn't have a debt ceiling. There's only one other country in the world that has a debt ceiling, Denmark, and they set it so high that it really doesn't matter. And the only reason we have a debt ceiling was because of politics around borrowing for World War I. Remember, World War I, not even World War II. And it was a long time ago. And for various reasons at the time, it was easier for the government to borrow politically if there was a debt ceiling. And then we've stuck with this for all these years. Before politics was so polarized, it didn't matter that much. There was always a little skirmishing around the debt ceiling. But until 2011, when the then Republican House majority mobilized it against President Obama, we hadn't had these problems. We should repeal the debt ceiling. Mitch McConnell, the Republican leader of the Senate, once had a proposal giving the president power to override it. None of this happened. I think President Biden would have been better off to try to get something like this through the last Congress, where there was a Democratic majority. They figured they weren't going to be able to get it passed, and it would have been difficult. But the debt ceiling is an idiotic idea because Congress can spend all the money it wants. It incurs these debts, and then they have to vote again. It's like you're running up a credit card bill, although I'm sure you wouldn't do that, but you're running up a credit card bill and then saying, well, I can't pay it because I have this provision that puts a ceiling on how much debt I can accumulate after you have all the goods in your house or have taken all your vacations. It's crazy.
I like that analogy there, EJ. And one more question for you with kind of what we're hearing about the timeline. They're getting apparently closer to a deal and reportedly expecting for this to extend the timeline now out to 2024. To Julie's point earlier, is this really just kicking the can down the road for the next administration, whoever that would be, or past 2024, really, to deal with?
Well, it is true that it's kicking it down the road, but, this is a road where this is a can I really want kicked down the road. I think everybody, your viewers who are investors, really want it kicked down the road. So I think it would be a big deal if it were extended that far. Your premise is right. We shouldn't, I don't think we should have a debt ceiling, so we shouldn't have to go through this again. But at the moment, there are not the votes to get rid of a debt ceiling. So 2 years is the best we can do right now. And if it happens, I'll take it because I prefer that to cratering the global economy.
Right. To there being no deal. Exactly. All right. Our thanks to you, EJ Dionne, Brookings Institute Senior Fellow in Governance Studies and Washington Post columnist. We appreciate you.
Joy to be with you. Thanks.
All right. The Fed's go-to inflation gauge has come in hotter than expected, PCE, adding to the debate over the June rate meeting. The CME's Fed tracker now largely pricing in a quarter-point hike. Let's get the details with Yahoo Finance's Jennifer Schonberger. Jennifer, take it away.
Hey there. Good morning, Diane. That's right. The Fed's preferred measure of inflation actually accelerating in the month of April. That core PCE number clocking in up 0.4% month over month, year over year, 4.7%. And that is actually inching up from the 4.6% that we saw back in March. And of course, what was expected. This clearly goes in line with how Fed officials have said they are frustrated with the slow pace of bringing inflation down. Take a look at the Fed Fund futures this morning. They've been jumping around, very volatile. But they were pricing in as much as nearly a 60% chance that the Fed could hike by 25 basis points in the middle of next month. You look at the Fed minutes that were released on Wednesday, and Fed officials during the last meeting were really uncertain about what their next move was going to be. Several were leaning towards a pause, but many really wanted to keep their options open. Since the last meeting, of course, we're hearing from many members of the Fed. Last Friday, Fed Chair Powell saying that he really wants to keep options open. Along with that, Fed Governor Christopher Waller saying he's not certain what he wants to do in June, but until we see convincing evidence that inflation is cooling, the Fed should continue to raise rates. Along with that, St. Louis Fed President Bullard has been calling for 2 more rate hikes. Dallas Fed President Lori Logan saying now is not the time to pause. On the flip side, we heard from Boston Fed President Susan Collins yesterday saying that the Fed may be near a point where it could pause. Of course, we're going to get more data here. Next Friday, we've got the jobs report. We're also going to get CPI out on the first day of the Fed's meeting. So that will help paint the picture in as well. But you mentioned the debt ceiling earlier on in the program. And while it seems like negotiators may be zeroing in on a deal right now, it remains to be seen whether they can actually get this over the finish line in time to avoid a downgrade in our credit rating. So that remains a wild card. If we are able to get past this debt ceiling and pass it, then perhaps the point is in the camp, if you will, for another June rate hike. We'll have some more clarity towards the end of next week. Ladies,
something we have to know too, Jen, is that the Federal Reserve seems divided right now in terms of, because we've gotten a lot of Fed speak, right? So how does this number sort of feed into that?
Right. So exactly what I was saying was we have so many people in one camp who want to see and wait for the data, and then others who aren't really convinced that they say inflation is too high. Sort of your Lori Logans, your Mesters, your Bullards, perhaps Waller could be in that camp as well. And so, again, taking this number out aside from the debt ceiling fiasco, it would lean in favor of another rate hike, I think, in their view. But again, we're going to really have to see how these negotiations shake out. If they don't make the deadline in time and we see markets crash, that is obviously going to have economic implications, and that could bode for perhaps a pause until July to see how things shake out.
All right, excellent commentary as per usual from our Jen Schonberger. You're welcome.
And I have to say, ladies, you guys are coordinated there.
It wasn't even on purpose. I mean, great minds think alike.
It was an accident. There's something in the water this week.
I know, I agree. All right, switching gears. So let's take a look at some earnings. Shares of Costco in focus this morning. Stock range bound after earnings yesterday missed Wall Street estimates. The drop fueled by slower than expected sales growth. Small drop in the stock price as shopper demand for discretionary items weaken. Yahoo Finance's own Brooke DePalma joins us now with the details. Take us through it.
That's right. Good morning. While same-store sales were up about 0.3% compared to Wall Street estimates of up nearly 3%. Now, here in the U.S., that number actually dropped about 0.1% versus expectations of up nearly 2.4%. Now, the key takeaways that impacted those numbers: foot traffic or shopping frequency. The CFO said it, quote unquote, remains pretty good. It was up about 4.8% worldwide, and here in the U.S., up about 3.5% as inflation remains and consumers look for value. They do, in fact, over-index to higher-end income consumers. Now, you do have to note, though, that those consumers that are shopping while they're going in store, they're actually spending less while we're there. We saw the average ticket down about 4.2% across the globe and down 3.5% here in the U.S. as we hear from other companies like Walmart, like Home Depot. Consumers are moving away from discretionary items and towards more packaged food and groceries. We saw that once again detailed here in Costco results. And the last thing to note here, e-commerce sales down 10%. Once again, they are moving away from big discretionary items. That was about down 20% in e-commerce sales, but big discretionary items did make up more than half of e-commerce sales. In addition to that, it's important to note here that Costco enjoys people coming in store. They do said that they see more of a benefit of people coming in store as opposed to buying online. They said that online sales comes at a cost there, but they do plan to grow incrementally as far as e-commerce goes, and they do have delivery partners as of now, like they call the big kahuna partner there, Instacart at Costco.
And I was looking at membership fee revenue. It did rise about 6.1% year over year, but it was in line or a slight miss of estimates. And we keep looking for them to maybe raise those fees.
Right. Well, it's not happening anytime soon yet, Julie. So Wall Street, Main Street certainly keeping an eye on that. And they did once again emphasize that it's not happening anytime soon. Now, they typically do raise it every 5 years, which would bring us to now. But on the call, UBS analyst Michael Lasser said, wouldn't it make sense to raise your fees right now because your renewal rates have been so high, once again, up 6.1% year over year, and you're providing even more value in this difficult environment. The CFO, Richard Galanti, said, nice try, Michael. At some point we will, but not now. Take a listen.
Our view right now is that we've got enough levers out there to drive business, and we feel that it's incumbent upon us to be that beacon of light to our members in terms of holding them for right now. It's not a matter of a big time, but we'll let you know as soon as we know.
Now, as you saw earlier, Costco membership fees are currently $60 per month for gold membership and about $120 per month for executive membership. But breaking down that state of Costco's membership sales, once again, were membership revenue was once again up 6.1%. Sales per member down 5.1% as they continue to move away from those big ticket items. But we did see members per club increase 4.4%. And once again, that membership fee revenue up year over year, now $1.04 billion in revenue last quarter.
Hold up. It's $60 per month? Is that right? Or per year?
Per year, correct.
I was going to say,
correct.
Laura,
apologies there.
Exactly.
Then it would have increased a lot. But no, $60 per a year, $120 per year as well. Okay. Sorry about that.
That's okay. I just wanted to make sure that my eyes I felt like it was like, woo. Okay. Thank you, Brooke. Appreciate
Of course,
it.
of course.
It's Friday.
It is. All right, let's get to our morning brief now. Shares of NVIDIA, of course, had a huge gain yesterday. They hit an all-time high today. They are little change. The chipmaker added nearly $184 billion to its market cap in yesterday's session alone. Now that total is $938 billion. It was the third largest market cap gain ever for a stock. But were these big moves a sign of a stock price bubble? Executive editor Brian Sozzi is joining us now. That's what he wrote about this morning.
Yeah, well, I hope this doesn't represent like the market top in NVIDIA. Now suddenly we look a year back and NVIDIA is 50% lower. But look, we have seen anytime you see a stock price gain more than almost $200 billion in terms of a market cap in a single session, that is just absolutely ginormous.
It's insane.
It is insane. So you get to thinking, is this like the cannabis stock bubble of 2021, early 2022? Is this the tulip bulb? Is this the top? Is it a tulip bulb mania? And what I mentioned in the brief, it's not. And this is something, right? This is something that you and me talked about, Julie, in the newsroom this morning, the other morning. NVIDIA is making tangible stuff. They're making chips. You could see and touch their stuff, and they're making things in grand fashion that is getting used by the likes of Meta, many other companies to stand up their artificial intelligence initiative. So that is good stuff. There's strong demand for what they're doing. So that's first. Second of all, you look at CEO Jensen Huang, and Julie, you and Dan Halley, our tech editor, have gotten to know Jensen through a series of interviews through the years. I like that he has stayed measured throughout these past few years. He continues to execute very strongly. How do I know? Past 6 years, NVIDIA has hauled in over $40 billion in operating profits. To me, that's a sign of a leadership team staying focused. Despite all the frenzy in the market that's going on around them, they're executing at a very high level. Profitable company, doing tangible stuff, and ultimately they're on the leading edge of technology that's going to help companies do more stuff over the next decade.
And I mean, they were in ChatGPT before we even knew they were involved with ChatGPT. And, you know, the people that we talk to tend to say that, like, they're, in terms of leadership, they're so far out. Second place is you know, a distant second place, like, say, AMD.
What bothers me, let's keep in mind, AMD earnings call about 3 weeks ago, let's say. They went on there and they told the street that we are just now setting up our generative AI team. From an investor standpoint,
they're behind.
Wildly two opposingly different stories here. You have an NVIDIA already at the leading edge, gaining business from Microsoft or ChatGPT, which is backed by them, and now they're winning large amounts of business while AMD is still trying to play catch up. That's not good.
At the same time, there probably is a bigger investable thesis here. And I was struck by a note out from Citigroup strategists today. First of all, they upgraded overall U.S. stocks to neutral, but they upgraded tech shares to overweight because of AI. And they don't talk about NVIDIA specifically because they're strategists, macro strategists. They're looking at the bigger picture. But the quote from that was cited from this really stuck out to me. We would expect that it is too early to fade the moves before AI has even developed far enough to be able to disappoint expectations. I thought that was so interesting. It is such early days here. Now, maybe it's true of NVIDIA specifically that it could disappoint expectations. But when we talk to people on the show about this, even people who are steeped in AI, they don't know what's going to happen, right? There's this hope and there's our imagination, and there are some concrete things that the likes of NVIDIA and their clients are doing, but really we don't fully understand what the capacity or not of this is going to be.
And the street doesn't understand. Look at that guidance that NVIDIA came out with. The street was at $7.2 billion. They came out $11 billion. I have not seen that type of just disparity in terms of guidance in many, many, many years. It tells me very strong demand. But the other way to read this, and I think this is what Citi is trying to say, for all these generative AI chips that NVIDIA is selling, look at a Meta. They're using those chips to stand up their own AI initiatives. What does that mean? Maybe fewer workers and bigger profits. I think that's part of the play here for Citigroup.
But I also wonder if they were trying to throw water on the potential for another kind of dot-com bubble, you know, where we went through that before. But I don't think that's NVIDIA's
This
problem,
isn't normal.
Obviously.
This is not normal. I want to be very clear. This is not normal to see a company gain over almost $200 billion in market cap in a single session. An investor, you know, I encourage you, go to Yahoo Finance, go to our stats page on NVIDIA, and you will see This stock trading at record level valuations. What does that mean? Every single quarter now for NVIDIA for the next 5 to 10 years has to be extremely strong, has to show accelerating growth rates in sales and profit. And if they don't, this stock's coming back down.
Just one footnote to all of this. There is one big investor that did not benefit, who has been a long time
Cathie
booster.
Wood, right?
Cathie Wood.
Yes.
Her flagship ARK benchmark fund got out of NVIDIA back in January. She holds it in some of her other funds. She has been a big supporter of the stock for years and years and years. So it's interesting that she stepped out. She had made some comments about its valuation. So
I don't get this call. Cathie, I very much appreciate what she does, but if you are betting on the future of everything in tech, how do you not stay long NVIDIA? NVIDIA is driving these things.
Maybe she'll wait for a drop and get back in. I don't know.
We'll see.
All right, coming up, another company benefiting from AI. We're talking about Marvel Technology. We heard Srini Pajuri yesterday. We talked to him, Raymond James, we talked to him on the show, and he said this would be one of his picks in AI. We'll talk about it next. Welcome back. We're a few minutes from the opening bell. Let's talk about some movers. Marvel Technology soaring this Friday morning, up some 19% after posting solid earnings after hours yesterday. The real news driving the stock higher is the buzzword of the season, AI. Marvell CEO Matt Murphy saying in the company's earnings release that, quote, AI has emerged as a key growth driver for Marvell. And not only that, the company says that revenue this year, in this current fiscal year from AI, is going to double. Like, this is the same kind of magnitude of surprisingness that we
talked about with NVIDIA.
Exactly.
And, you know, we talked about the analyst we spoke to yesterday who said this would be on his list, and look at it, you know, outperforming in general. So certainly reaping the rewards of that, both that investment in AI and the future forecasts related to AI developments. So we're certainly continuing to see just that strength in the tech sector as a result of this.
Yeah, and a lot of the analyst commentary is positive about this and saying that they're seeing this acceleration of demand for AI here. Harsh Kumar, a friend of the show from Piper Sandler, saying that when it comes to Marvel, it sees AI applications as the biggest driver for it, and the overall opportunity has expanded to, quote, encompass over half of the available revenues for overall programs.
This is thisgenerations.com.
But hopefully not the bubble.
Yeah. I mean, we'll see what happens. All right, here we've got the opening bell on Wall Street on this Friday morning, and what has been a week that defied expectations when it comes to AI and the potential for it. First, NVIDIA, now Marvell, a smaller example of the enthusiasm that we're seeing for it in the market. Let's take a look at the opening prices here as we get underway, and it looks like we're seeing some indications for a higher open. Still waiting for that Nasdaq Composite to open, since it is more of a bigger index. Our opening market check sponsored by Flex Shares here, and maybe a little bit of the lift today also being accounted for by some cautious, maybe incremental progress on the debt ceiling deal, and perhaps that we are seeing that move a little bit closer to reality. So that helping matters this morning, even as traders are ratcheting up the odds that the Fed is going to raise at its June meeting.
Exactly, but also that strength in the tech sector, I'm sure we'll continue to see play out as well. Meantime, though, this is the flip side of that. Shares of Ulta trading lower, down double digits this morning, down about 10%, 10.5%. The company did beat analyst expectations on earnings and revenue. Earnings at $6.88 a share. That doesn't matter, though. Investors aren't liking the company's full year outlook. The cosmetics retailer lowered its forecast for operating margins, now expecting 14.5% to 14.8%, down from 14.7% to 15%. One of the factors hurting margins, and we heard this talked about at various retailers, is shrink, as they call it, or theft, as we know it. A story we've been seeing at a lot of the retailers this quarter. And keep in mind, we know that Ulta has a big presence in Target. Target was highlighted that as a big problem within that retailer. So you're certainly seeing the effect of that. Ulta also talked about kind of some of the trends of, they'd seen some strength with people returning to office and buying the latest beauty trends, but that's cooled some.
Yeah, I mean, sales are not the problem here. Comp sales were up 9.3%. That was better than estimated. So now we've heard from Target, we've heard from Dollar Tree, we've heard from Ulta that have really talked about this theft problem here. The interesting thing here in Ulta is it's gotten worse. It's not necessarily new, but it's gotten worse. And the company said they put in place a bunch of measures last year, and they thought it was going to get better, and it didn't. Those measures were not successful. They talked about the need for law enforcement and for maybe some help from municipal authorities, et cetera. So obviously this is a big and growing problem.
People are stealing lipstick. I mean, that can fit.
But that's not the problem that we're talking about here. We're not talking about an individual going into these stores and selling.
It's organized crime.
It's organized crime. If it was just like these one-offs, that wouldn't be as big an issue. It seems to be that it is a more organized fashion. So it's a really interesting story that we're going to continue to track.
It is. Let's switch gears, talk about another stock in focus today, Workday. That stock getting a boost up about 8%. The company reported a beat on the top and bottom line after hours on Thursday, as well as major gains in its closely watched subscription revenue. The enterprise software company also saw non-GAAP operating margin of 23.5%, beating its own expectations of 21.5%. So you're seeing that stock being rewarded. Workday also mentioned AI. Right?
Everyone's in the AI business. Why wouldn't it mention AI? I mean, a lot of these companies, at least that are mentioning AI at this point, it makes some sense. Like when you have Pepsi mentioning AI. They're just throwing it in there, right? But, and yes, they're working on something legitimately, but nonetheless, something like Workday makes sense. The subscription revenue for Workday, it lifted the lower end of its forecast for subscription revenue, and that's really its bread and butter, right? That recurring subscription revenue, so that seems to be positive here. Interesting small note here on an executive change at the company. It's getting a new chief financial officer, Zane Rowe, who was the CFO at VMware. The person who had been in that role, Barbara Larson, only had been in, call it a year and a half or so. She'd been at the company for a while, but only as CFO for about a year and a half. So just
a little C-suite.
A little
change there.
Exactly.
Yeah. All right. Meantime, Pfizer is entering the weight loss drug space for the first time. On Monday, a new peer-reviewed study of Pfizer's phase 2 clinical trial results showed that Pfizer's oral weight loss drug could be as effective as rival Novo Nordisk Ozempic. Studies around weight loss drugs are ramping up, and it shows in the concentrated efforts these pharmaceutical companies are making. We have here with us Yahoo Finance's Anjali Khemlani to tell us more. Anj?
That's right, guys. So listen, we know, of course, there's been a lot of discussion around weight loss drugs, and in particular, the type 2 drugs that are being used for weight loss in eligible patients. But what's really happening now is this focus on the weight loss part and obesity really ramping up. You're seeing the dovetailing of interest, including those who have been advocating for recognizing obesity as a chronic disease for quite some time, as well as now this new generation of what is known as GLP-1s. And they've been around for some time, but this new generation is really what has caused a lot of interest. So let's take a look at what we have on the market right now. We know that there's, of course, the Eli Lilly, we've got Novo Nordisk, and we've also got Mounjaro. And we've got now these oral versions, because those are all injectable. So Novo Nordisk with its phase 3 trial, that's the leader in this area. Pfizer, like you just talked about, in phase 2. And Eli Lilly just starting on its oral options as of this week. So we've got a lot on the table looking at a rollout for the next couple of years. Meanwhile, we know that companies are starting to already prescribe these for obesity alone. That includes companies like Weight Watchers and Noom, which we've talked about this week, really switching gears from what they've been pushing before, which is more behavioral and lifestyle, and then telehealth platforms like Ro, who are also jumping on the bandwagon. So that's sort of where you see this focus right now. It's something that is really of concern. We've seen how insurance companies have been pushing back on coverage, and there's a reason behind that. So I got a chance to talk to Found CEO Sarah Simmer, and she had this to say about this. In discussions with employers, she said they're seeing Ozempic go from not even the top 20 of drug costs to literally number 1 within 6 months' time. One employer said that Ozempic prescriptions had increased 400% year on year. Now, that's clearly not type 2 diabetes patients jumping up 400% year on year. So what's in the pipeline right now, we know, is focusing on a number of things. It's not just about the weight loss, that's the positive, but also other byproducts and other comorbidities to type 2 diabetes. So while taking type 2 diabetes drugs does have these side effects that we know about with Ozempic and Wegovy and the like nausea, diarrhea, and vomiting, we've also seen on the plus side with the weight loss, there are seeing signals for potential improvement in stroke and reduced heart attack in these patients. So that's where even more enthusiasm is coming from the scientific community. So that's why you're hearing a lot about these drugs, even though they've actually been around for some time. But you're starting to see even more enthusiasm around them for this
because
reason.
They're working too. That's part of the enthusiasm that you're seeing around them. And I mean, and Noom, obviously part of it, yes, they had a behavioral, but maybe some of the behaviors aren't working and they're trying to figure out, how do they repeat customers?
It also helps accelerate that process. And an important point on the oral part is also to help diabetics move away from needles. That's like a really big push in the type 2 diabetes community.
Just a couple, I have so many questions, but just a couple of things to mention. You talked about the platforms that are now using these. The ones that don't seem to be, like a Hims and Hers, actually has recently been seeing its stock drop. It's up today, but like for the week, it's been seeing some rockiness there. I also want to ask you about supply, though, because that has also been a big issue here for the people that need this stuff, not for weight loss, but for diabetes. Are we seeing these various companies do a big ramp up in production to meet this now increased demand?
Well, because they're specifically catering for type 2, it's based on that population and what they expect those prescriptions to be. You saw, for example...
So wait, they're not basing it on this new weight loss demand also?
Because it's not all those drugs are indicated
because they're off-label.
They're off-label.
Yeah.
And on the Hims part, they want to, they're waiting. So it's not like it's completely off the table. So you're seeing some of the people cautiously... Everyone wants to. It's a big moneymaker. That's why these drug makers are even in this business. That's why you saw Pfizer quietly working on this. Do you know Eli Lilly?
It will be left behind if they're not.
Yeah, exactly. Eli Lilly's drug, they actually acquired it from a Roche subunit in 2018. That oral version that they're developing is from 2018. So this has been in the works for quite some time. It's been developing as a hot area. I think COVID just kind of put it to the side for some time.
I just can't help wondering how all of this could backfire. I mean, maybe that's my own bias showing, but like I think of the diet pills of the past, and they never.
I do remember that.
Long-term. You've got a point there. So long-term impacts is what clinicians are looking for. What Ozempic face, as it's known, or what are the longer-term impacts?
What is Ozempic face?
Well, because they lose weight so fast that they have Ozempic face, where their face just, I guess, sags, and, so they're calling it Ozempic face.
And also the weight gained after you get off it. And then
that's one of the challenges.
And
like,
what if you stay on it forever?
Do you have to stay on this for life?
Right. And the cost that goes with it. So there's a lot of unknowns, and they haven't even tested these in healthy obese populations. Eli Lilly just announced that they're starting a trial in that. So it's very complicated. That's why you're hearing just like the surface buzz about it. But underneath, if you sat and did the research I just did for the past week, you'd see just how complex this area is.
Well, and forget about testing it on healthy obese people. What about testing it on healthy people
who are not obese?
Who are now using it?
Which some are. I mean, it's very popular on the West Coast. All right, we're going to put a bookmark in this.
We can have a whole segment on this.
Anj, thank you so much. All right, coming up, a spending slowdown hit Costco this quarter. So what does that mean for the retailer? We will speak with Cohen's Oliver Chen. That's next. Tech stocks, led by semiconductors, are trouncing the rest of the market. Now, Thursday, for the first time since the dot-com bubble bust 2 decades ago, the tech sector surged nearly 4%, while the equal-weighted S&P 500 finished in the red. Lots of disparities popping up in this bifurcated market as we approach the debt ceiling X-date. We have here with us Yahoo Finance's Jared Blickery to break it all down.
That's right. And we have 2 major themes here. As you noted, we've had this incredible outperformance by NVIDIA and certain growth tech stocks, especially the mega caps. Meanwhile, we got the debt ceiling looming. We're going to tackle that in a second. Just want to show you what's happening in the NASDAQ today. NVIDIA taking a little bit of a breather, but I'm going to put the market cap numbers here. NVIDIA approaching $1 trillion, now the 5th largest stock in the NASDAQ 100. And it's competing with Amazon now for the number 4 spot. Want to show you year to date just so we have a handle and can wrap our minds around what's been happening here. NVIDIA now up 159%, trouncing Meta, which is also up an impressive 111%. And let me just put this in perspective. The market cap gains that we had yesterday, that was the 3rd largest by any company in history. You have to look at Apple and Amazon back last year. They each gained about 191 billion in one day, but NVIDIA gaining 184 billion. Trouncing that Apple record from back in also 2022, Microsoft, and then Tesla gets a spot there as well. So let me talk about the disparity that's popping up in terms of who's getting the hot money. This is the S&P 500 market cap weighted versus equal weighted. So market cap weighted means the higher, the bigger the company, like NVIDIA, which is approaching $1 trillion, the greater the weighting they get. This line, this squiggly line down here, just shows you who's outperforming. Is it the market cap? Is it the big guys? Or is it the little guys all kind of marching together? And we have the biggest disparity here going back to the beginning of my data in 2003. And you go back, you might get some challenges from the dot-com area. And we can express this a number of ways. Here's the Nasdaq 100 versus the Nasdaq Composite, 100 stocks versus maybe 3,000 stocks. And you can see we got a little bit of a bump up here. This goes back also, what, 30, 40 years. But the dot-com bubble crash, just to show you how big these disparities can get, that was much bigger. So things can definitely get more bubbly. But what I want to focus now on is the debt ceiling, because U.S. debt is now riskier than corporate debt for the first time ever, says Bank of America, going back in their data to 1986. This shows you the investment grade. Investment grade yield minus the U.S. yield, and that would be on U.S. government debt, which is supposed to be risk-free. Well, now it's in negative territory, and that's just because of the mechanics surrounding the debt ceiling. We now have 4-month T-bills yielding 6%. There are some bills that are right around the expiration date coming here that people just don't want. So if we fail to get a debt ceiling resolution, probably easily head down another 5 to 10%. We could see 3,800 in the S&P 500. Even if we get a resolution, guess what? The Treasury has to fill its coffers back up, maybe $500 billion to $1 trillion between us and Europe in tightening throughout the rest of the year. So all of this points to increased headwinds for a lot of these stock moves. So can the huge AI-fueled bubble, or is it bubble-ish, that we're watching right now in NVIDIA continue? Well, it depends on what happens with the debt ceiling, but a failure to pass probably means an immediate 5 to 10% wipeout in stocks.
And then if we do get the Federal Reserve raising rates on June 14th.
Well, you want to add another monkey in the wrench?
Right.
Yes. I mean, that's under consideration.
We got flies in the ointment doing backstrokes here.
We got all the analogies.
Jared.
Thank you, Jared.
Thank you.
Appreciate it.
All right.
Well, let's talk about another fly in the ointment, perhaps, the consumer spending story. It stays in focus with results from Costco, the warehouse chain, showing it is not immune to choosier shoppers who bought fewer bulk items last quarter. Same-store sales growth slowed. Back in February, CFO Richard Galanti warned investors over weakness in big-ticket discretionary items, and this is a theme that we have seen across the sector in the last few weeks. Joining us now, Oliver Chen, Cowen Senior Research Analyst. Oliver, good morning. What a pleasure to see you here this morning. Let's talk about Costco a little bit here, because we did have in particular the U.S. comparable sales, excluding fuel, that did not rise as much as estimated. What's going on here? One would think that Costco could do well in this environment.
Julie, great being here. Happy holidays as well. So at Costco, we are really excited about the continuation of exceptional value, high quality. What's really distinguished here is traffic continues to be positive at 3.5%. But what you brought up earlier, Julie, big ticket items, big and bulky, home electronics, that's been a tougher negative category. And that's particularly vulnerable online, as about half of those items are big and bulky. On the other hand, food essentials, that's working really well at Costco. We continue to love it as our top idea, Costco at large. It's actually a very simple model. In many ways, it's not even a retailer. It's a membership model. And all customers are looking for value. So structurally, it's one of the best merchants in the industry. And this is one of America's few exports globally in terms of retail. One of the big facts of Costco is they only have 3,500 to 4,000 SKUs. That compares to 200,000 plus at Walmart. Having that assortment is quite powerful, and everybody likes the Kirkland brand. That's about 30% of the business mix. That's compelling too, having that unique private label.
So, Oliver, I got to ask you, Diane here. So you say it continues to be one of your top ideas. You also cover Walmart. So how does this compare to a Walmart? You would think that you would see kind of similar strength in Costco compared to Walmart, but it looks different to me. What's your assessment?
Yeah, at Walmart, we're also excited by the momentum in grocery. Walmart is the US's leading grocer. It's about 60% grocery. That's a key positive. But as you think about Walmart, we think about a retail ecosystem, which means digital advertising, financial services, health and wellness. The GLP-1 drugs also helped Walmart's numbers too. Walmart offers everyday low value. That's a core theme at Costco as well. Costco has a higher income customer. But what's happening at Walmart with curbside pickup, with the American Express deals, with Walmart Plus, they're also attracting higher income customers too. But as you know, 90% of America is within 10 miles of a Walmart. So it's very much America in terms of who it broadcasts to. But as we think about Costco, it's a core membership model with a very fixed quantitative low markup. So you really can't get a better deal. As you think about Walmart, you think about a company that's bricks, clicks, and portals as well, and as a broader technology company with a very well-run grocery system as well. So we like that. And then bigger picture thematically for investors, we like what we call the bow tie thesis. So own LVMH and luxury as well as own deep value.
Speaking of which, you should be wearing a bow tie today for your theme, Oliver, as you have, I think, on occasion. I am interested in that thesis, and I'm interested in what you have to say about luxury, but I got to ask you about something else first, and that is, quote unquote, shrink, the theft that we have been hearing about time and time again during this earnings season. Ulta was the most recent that talked about it, but we heard it from Dollar Tree. We heard it from Target as well. What is going on in retail America? And why does it seem like the retailers are having so much trouble stopping it?
Yeah, unfortunately, it's been worse than expected. So as we look ahead, the plan is for more labor as well as working on fixture. And this was a big charge at Target. It was $500 million. It also led to impact of Ulta's SG&A margin. So the impact is very real. What really needs to happen is collaboration across the government, companies, society, products. A collaboration likely needs to happen. I don't think there's an easy solution to this, and it continues to evolve. But unfortunately, it's gotten worse, and it's been quite material in terms of the margins and what stores have to do, largely in terms of investing in additional labor.
And of course, Oliver, to your point, also about, say, Target's hit from this issue, Ulta has prominent placement in Target. Let's widen out in terms of Ulta. What was your overall assessment of their results this latest quarter?
Yeah, we've loved Ulta as a long-term idea. What we have been cautious about is peakish margins, because this company has performed great. Investing in your face, wellness, that's been a long-term trend. Also, cosmetics and skincare are doing great. That being said, last night was tough with the margin profile. You know, as you mentioned, Diane, thinking about the shrink and what it did to operating margins, that was a negative. Also, we're starting to see an uptick in promotions. That's also not good, too, in terms of thinking about the margins. And this is also a story of a company that's continued to hold on to great gains throughout the pandemic as people really think about self-care. So we're encouraged for the long term, but what happened in terms of expectations being very high, peakish operating margins running at 14 to 15%, as well as an attractive valuation, that caused some caution into the print in terms of how they printed relative to expectations. It's the Home Depot for women. It's a unique concept. They have a very good loyalty program. You know, as we think about loyalty, artificial intelligence intersects very strongly with loyalty and really how much data you collect. Augmented reality is actually working in beauty as you sample different shades online as well. So we're excited about that sector at large. And the consumer puts wellness as well as beauty together. And also, as we think about Gen Z, it's a very ethnic sector, a very ethnic population. So beauty plays well into what's happening with the beauty enthusiast as well as social media.
And Oliver, by the way, I love that Home Depot for women analogy.
So did I.
Let's get to the bow tie, and in particular, the fancy part, I guess, of the bow tie, or what some people would call a barbell approach, the LVMH and Richemonts of the world. LVMH, such an interesting story because, of course, became the first European company to top $500 billion in market cap, but it's well below that now because of the recent rout in the shares due to concerns over growth in China. Is that something that you're concerned about? Can it reattain that $500 billion in pretty short order, do you think?
Yeah, healthcare has the number one biotech expert and healthcare team. We just had Yaron Weber on very moments ago. What the XBB variant is happening in China now, but we don't expect closures, actually. So the stocks had a shock last week, but this could be a great buying opportunity. LVMH is our top European idea. You know, you've known me for a long time, Julie. We've loved LVMH for many years. It has $10 billion of marketing spend. It's the biggest market cap company in Europe. Having that much marketing spend combined with power brands, the Louis Vuitton brand runs at a 40% plus margin. You get Sephora, which is a premier beauty retailer, and you also get Dior as well as Tiffany. So you're getting a broad array of power brands that have reached extreme tipping points where they can spend a lot on advertising and promotion. And we've seen attractive price leverage at the high end as consumers go out again. And as the Louis Vuitton and Dior brands just continue to reinvent themselves with lots of innovation. Art, a new creative artist, Pharrell Williams, joined LV as well. So all those things have lead to sustainable long-term growth. And he's doing a great job managing capital. In many ways, LVMH is an asset manager of a portfolio of brands for the very long term. We're excited about that. And as we think bigger picture, the Chinese consumer, the emerging market there, it's a big, important driver, given that it's about 25 to 30% of revenues and 30 to 50% of growth contribution longer term. But again, at the high end, that customer is very strong. We're worried about what we call the aspirational consumer, the more entry-level luxury consumer. We've seen cracks there, and that's been true in the U.S. as well.
Yeah, that makes sense if we're getting all the recession talk that we have been. Oliver, always great to get your perspective. A lot of different tickers and stocks for people to keep an eye on in that discussion. Oliver Chen is Cowen Senior Research Analyst. Thanks.
Pleasure being here. Thank you.
And let's take a look at another trending ticker that we are watching today. Shares of Tilray plummeting almost 20% this morning after it unveiled it would be offering a 5.2% convertible senior note offering due in 2027. It announced pricing of $150 million of that. That move might have led to concerns of shareholder dilution. That happens because those bonds are convertible into debt, which could dilute value for existing shareholders, or could be a concern I guess, that the business's debt load more widely needs to be refinanced in some way. We'll be keeping an eye on that. Owners of the notes will have the ability, as I said, to change them to Tilray shares ahead of the 2027 deadline. Shares of the cannabis company, by the way, are also down for the year to date.
Meantime, coming up, why our next guest is betting on more rate hikes to come from the Fed. We'll discuss. That is up next.
Welcome back to Yahoo Finance Live. I'm Julie Hyman with Diane King Hall. Brad Smith is on vacation today. Let's do a quick check of the market sponsored by FlexShares. All three major averages in the green. Once again, we see the Nasdaq leading up by 1%. The Dow and the S&P up about 0.75%. And let's dig into it here on the Wi-Fi Interactive to see what sectors are on the move. Here's today's action here, and we have consumer discretionary that is up the most today on the strength of some of these earnings we've been talking about. Then we've got Infotech in the second place. There it's up about 1.29%. Utilities, the only group in the red. Want to take it to the 5-day view here to see what we've seen on the week. Here, this represents the S&P 500, and it's down about 0.3% on the week. Tech has been strong. Thank you, NVIDIA. But on the flip side, we've got consumer staples and utilities and materials that have fallen on the week. We've been talking so much about retailers here that I do want to take a look at how they have done. So let's take a quick look first at today's session here, where we have Amazon actually up to 2.6%. Costco in the green now, up by about 1%. Ulta, as we've been talking about, is taking a hit. It is down by 12%. But just quickly, if we can look at that 10-day view here to see how they've done since we've gotten the beginning of earnings. Not a lot of strength there in the retailers. Diane?
All right. Now, the question is, will we enter a recession or not? That question on just about everyone's mind since the Fed started aggressively hiking rates. Plenty of economists and analysts we have on Yahoo Finance have forecast a recession for some time this year. But the more data we get, the more it seems like the economy could remain resilient amid high inflation. Here with more on this is Yahoo Finance's own Josh Schaefer. Josh?
Yeah, Diane, so it's been interesting as this data has started to come in, even just this morning with the PCE data. Mm-hmm. More and more people are still projecting that recession, but pushing it out a little bit further. So Oxford Economics, who we speak with a lot here at Yahoo Finance and are constantly quoting, now saying they see that recession that they saw in Q3 out into Q4. And when you take a look at the data as a whole that we saw this week, you saw GDP move up, right? We thought it was 1.1% growth in the first quarter. Turns out it was 1.3% growth in the first quarter. When you take a look at jobless claims and what we've seen from that fraudulent data in Massachusetts, now that they've fixed that problem, there's actually less people filing jobless claims than we initially anticipated. And then sort of you spin that forward, right? And you think, well, what does that mean for the Fed rate hike path? And how has that been priced in? Guess what? Take a look at the CME Fed Watch tool this morning. People are now pricing in a June hike. We've been talking about this for a couple weeks now. That was nearly opposite the other way going back a couple weeks ago. So it's been interesting to see how this data is sort of starting to push things into, are they going to hike in June or is it a pause and then a potential hike in July too? Because we got that jobs report next week, of course.
Right, exactly. I mean, the assumption is if we are going to have a recession, they would not be going in that direction, right. Or at least if we're in a recession. Thanks so much, Josh. Appreciate it. Let's talk more about inflation data here. Core PCE coming in hotter than expected, up 0.4% in April compared to the expected 0.3% as the Fed's preferred inflation gauge. This print will weigh heavily in the June meeting, as we were just discussing. Joining us now, Chris Rupke, Forward Bonds chief economist. Chris, thanks for being here. Yeah, inflation it will not come down as fast as anybody would hope. And in fact, we saw a reacceleration in April here. What's the Fed going to do?
Well, they really want this core PCE inflation, consumer inflation, to come down to about 3.5% by the end of the year, which means the monthly increases have to run 0.3% on average. And we didn't get it. We got 0.4% today. I mean, we do get a look at CPI before the Fed makes their next decision, but the market in the days running up to today's report is already betting on a rate hike at one of the next two meetings to 5.5%. And, you know, a 5.5% Fed funds rate, the core inflation is 4.7. I mean, that, you know, are rates really restrictive at this level of even 5.5%? That's why you hear some people talking about, well, back in the 80s, you know, they would have gotten interest rates much higher than inflation, which in today's terms would mean something like 6 or 7% for the Fed funds rate to slow the economy.
To your point, Chris, could you see us hitting 6% before the year's out?
Well, I think the Fed kind of knew this all the way along. They were kind of secretly hoping that somehow inflation would come down. Don't forget, Powell said himself that he was surprised how inflation moved from goods to services, and now it's stuck in services. But that's what happens when you let the inflation genie out of the bottle. It just prices just keep on going, unless you get interest rates to very, very restrictive levels. And I think if they would have come out even 6 months ago and said we need to push the Fed funds rate to 6 or 7%, obviously people would have freaked out. So it's kind of a gradual process. But if the Fed does pause, they kind of fall further behind here, and they risk that they need to push interest rates to 6 or 7%. At this point, I can only see a hard landing, and the hard landing to bring down inflation. And the hard landing's not going to happen without a significantly higher federal funds rate, unfortunately.
Chris, why isn't inflation coming down more? Is it still a supply issue? Is it just a demand issue? What is going on?
I think this is what happens. Once it gets out, again, I hate to use the inflation genie all the time, but once it keeps getting out, it moves from consumers back to businesses. Consumers get more wages because they look back and see inflation, and they ask their bosses for a raise to match inflation. It just becomes so circular. It's very, very hard to break that. Don't forget, in the 70s, they had campaigns from the president to whip inflation now and stuff like that. It's just very hard. And people, sometimes governments will lean on corporations and say, why are you raising prices? And corporations will say, well, my costs are going up or wages are going up. It becomes so circular. It's almost impossible to break it, this cycle of passing on price increases from one entity to another without a sharp slowdown in the economy, meaning basically a recession. We don't really have any experience with inflation falling without a recession or a near recession miss, if you will, which means in the old days, it meant more joblessness, higher unemployment rate.
And I got to ask you one question that's kind of a cloud hanging over everything right now. What is the risk that you see to the economy, although it looks like we will have a deal with regard to the debt ceiling deal, or debt ceiling negotiations, I should say, right now?
Yeah, we've seen this back in 2011, and it's nice to hear a debt deal's coming, but part of me just doesn't want to believe it. It's so complicated. If we get it through the House somehow with Democratic votes, you still need 60 votes in the Senate. I mean, maybe it'll all go well, but part of the Congress thinks we have a spending crisis, and they're willing to risk a debt default to get spending down. I mean, I have to admit, total outlays are like, 6.3 trillion expected this year. And they're arguing over like 700, 800 billion of non-discretionary fiscal outlays, only 10% of the total outlays. So, part of the electorate's going to be very angry about government spending. And it just seems like it's going to be very difficult here. They're going to push. I did go back. It wasn't widely known at the time, but obviously Washington officials would be remiss if they didn't take a look at what to do if there was a debt default. And they have put plans together back in August 2011, and I assume those plans are there again, where they could prioritize budget outlays. They don't want to do it, but they would certainly roll over the debt that comes due, and they would pay out all interest on Treasury securities. I think they have that plan in mind. Now, if they talk too loudly about that, that's just going to embolden the deficit hawks, the spending hawks on the other side of the aisle, the Republican side. It's a mess out there. I think it's going to be quite bumpy here in the next couple of months.
Yeah, I mean, Janet Yellen certainly has been doing the opposite, saying how dire it is going to be. So she definitely has not been talking up that emergency plan, if you will. Chris Rupke, thank you so much for your perspective. Forward Bonds chief economist. Appreciate it. Have a great weekend.
You too.
All right.
Let's take a look at another trending ticker now that we are watching. Shares of Nikola slipping today. The Nasdaq issued a warning to the EV truck maker that it is not meeting minimum requirements to stay listed on the exchange. Shares of companies listed on the Nasdaq, they got to stay above $1 a share for 30 consecutive trading days, or delisting becomes a possibility. Nikola has not traded above $1 since April 11th, but it says it does not currently impact its listing status. Nikola has until November 20th to regain compliance. And coming up next, kicking off the summer travel season with a busy Memorial Day weekend, Priceline CEO joins us next with the lay of the travel landscape. Let's get a check on the markets now, sponsored by FlexShares. We see stocks hanging on to gains here on this Friday, although it's not enough to salvage things for the week for the S&P 500. It's looking like it is going to fall about 1/3 on the week. But today, things looking good. The Nasdaq leading the way higher by 1%. And Memorial Day weekend kicks off the unofficial start of summer. Even with inflation remaining elevated, your annual vacation may actually cost less this year. According to Priceline, data shows rental car rates and airfare prices have dropped this summer, while hotels remain flat compared to 2022. This as Memorial Day weekend travel is expected to surge to pre-pandemic highs. Brett Keller is the CEO of Priceline. He's joining us now to dive into the state of summer travel. Thanks for being here. It's surprising that things are coming down because I think people feel like everything is going up right now. And so I wonder how that sort of psychological effect is also going to be affecting travel demand, Brett.
Sure. Well, we've seen prices come up very quickly over the last year, especially, and even through first quarter. I think for the first time, we're starting to see prices ease just a little bit, especially for domestic travel and over the Memorial Day holiday. But, as you try to book into those very high demand days, you're seeing prices that are still very shocking and really can hurt the budget, especially if you're trying to travel overseas, which many consumers are now trying to do. Prices to Europe and especially prices to Asia are still up materially from where they were just a year ago.
So, Brett, I got to ask you, so AAA forecasting a decline, as we've talked about in travel this year, in air travel. So down from last year, we saw just over 3 million and down, or actually, no, I'm sorry. That is the correction. They are expecting an increase in air travel this year. And that kind of flies in the face of what we've seen in terms of inflation. What is the data showing you in terms of air travel this year?
Sure. Well, we've had millions of consumers book trips so far this year on the Priceline experience, and what we're seeing is consistent with what AAA has shown. We're seeing that price points for airlines are have been up year to date and are starting to come down a little bit, but traffic levels are significantly higher than they were a year ago. We will probably see somewhere in the neighborhood of 10% more travelers moving through U.S. airports over the next 3 or 4 days than they were a year ago. And that has been a very healthy experience for the travel industry. But consumers seem to be pushing right through the higher prices, and they want to travel and they continue to travel.
Brett, what are they spending less on, right? Is it something in the travel stack, or are they just not buying as much stuff on the other parts of their budget? Or are you seeing any places within travel where people are driving instead of flying, booking a cheaper hotel, et cetera, et cetera?
Well, we haven't seen as much trading down yet, and that's possibly something we could see later in the year as finances really get tight for consumers. Clearly, with gas prices down considerably where they were just a year ago, $5 a gallon last year, now we're closer to $3.60 a gallon. That really is pushing more people out onto the roads and driving. And so the drive and stay market is going to be quite high this year. When people are really looking to save money, though, obviously they're doing some things with how they plan and book their travel. So, for example, just changing your date by a day or two in terms of when you fly can reduce the cost of a ticket by a couple $100. And so that's why we build tools on Priceline to help consumers really find the dates that are most attractive in terms of price points. That's one. Consumers will also shift destinations, right? Traveling to a destination like an Orlando or a Las Vegas, you can always really find flights into those markets because of the size and scale of the market that are more affordable than if you're trying to go to a destination like a Miami. And so consumers will shift destinations to really help fit their budget in terms of what they're trying to spend.
Brett, I also want to ask you, friend of the show, Liz Ann Saunders, who's an equity strategist, recently posted a chart looking at an increase in delays for the airlines, that we've seen an uptick in cancellations and delays. How is that affecting people's flight plans, or maybe they're choosing different airlines, or how is that sort of feeding through?
Well, last year, that came to a real head, if you recall,
Sure.
when cancellations really were reaching all-time highs. And the airlines have largely, got that under control now. In fact, they've built a lot more slack into their system. In fact, that's put pressure on prices because while the capacity may be the same as it was last year, or even slightly higher in terms of number of planes and seats, they've reduced the slack they've increased the slack in order to reduce some of those issues as we move through very busy periods like this, Memorial Day holiday. So overall, the airlines have been doing a pretty good job with that. And weather for the weekend looks pretty good in most parts of the country. That will also help to have a smoother experience for consumers. So largely, we haven't seen that as a material concern that have prevented consumers from booking flights.
And Brett, one more question before we lose you. Where are people going, especially for this unofficial kickoff of summer, big travel weekend we have right in front of us? So where are people going? Is this domestic, international? Is it a 50-50 split? What are you seeing?
Well, let's start with international. Consumers have really picked up their searches to international destinations over the last couple of months. In fact, we look at searches to destinations in top cities in Europe. So the big ones, London, Paris, Rome, Amsterdam, very hot destinations right now. And consumers are now beginning to go to Asia. So Japan, the Philippines, Thailand, very hot destinations as well, despite the expense that it requires now to fly to those destinations. Here in the US, consumers are going to the big ones. They're going to Orlando and Las Vegas for entertainment, and they're going to the big cities again. So Chicago is a top book city on our platform, as is Atlanta, New York, and some of those destinations over on the West Coast. So consumers are out and moving this holiday.
All right, so we should be prepared for more tourists this weekend in New York. All right, our thanks to you, Brett Keller, Priceline CEO. Coming up, from rivals to partners, why Tesla and Ford are coming together as the EV battle heats up. We'll explain. That's next.
Ford and Tesla are hitting the gas on their partnership, or maybe hitting the accelerator might be more accurate, announcing yesterday that Ford EV owners will have access to Tesla's 12,000 superchargers in the U.S. and Canada beginning early next year. Diane, this reminds me sort of like of Apple and Android devices, and what if you actually had adapters that the companies themselves sold?
Exactly.
So this is really fascinating. Ford will have adapters to use the Teslas, and eventually
12,000 of them.
The cars will be made with that adapter in the car. So I guess there would be two different ports, perhaps, in those Ford vehicles.
Exactly. And we teased this earlier, saying from rivals to partner, so it was kind of unexpected, because when they announced they were doing this Twitter Spaces, another Spaces chat, that it was going to be.
Okay.
Yes, exactly. It wasn't, they didn't suffer the glitches as the DeSantis announcement did. But it was, I just expected it kind of just be a conversation, not necessarily an announcement of a partnership here. So kind of coming together, bringing the old, in terms of the historic footprint that Ford has. Musk commented on and praised really Ford's Farley, its CEO, about how they were able to stave off bankruptcy, back in the day. And so you can see him trying to bring them together, and you can see both their share prices gaining ground as a result of that partnership. So we'll certainly be watching that, And Ford also first to the race in terms of the pickup side of EV.
Right. So just one more point to make on all of this. There has been some reporting that some Tesla drivers are a little bit annoyed at this. They're concerned already because they say there are delays at times at the charging station. So now if there are going to be Ford vehicles also that will be lining up, that could create a little more congestion. Of course, Tesla, as well as the federal government for that matter, is talking about building out these charging networks in a very decided fashion. So maybe that will alleviate some of that, but that's not going to happen overnight.
I know, but that also feels a little bit of you can't sit with us. So I don't know. I don't know. We'll see what happens with that. Meantime, millions of Americans are expected to pack their bags this weekend for Memorial Day travel. And with average gas prices standing pretty steady at $3.57 a gallon, pain at the pump is subsiding at a perfect time ahead of the holiday weekend, generally speaking, compared to a year ago. Robert St. Clair Jr., AAA Northeast Senior Manager, joins us now to talk about this. I saw you wait.
You traveled to the studio to see us
a year ago, right?
Yes, but we have not seen a corresponding rush to the pumps as a result of cheaper gasoline.
Right.
You would think that people would be burning it like crazy, but as measured by implied consumption, implied demand by the Energy Information Administration, we're actually not as high as 2019. We're 9 million barrels per day. 378 million gallons per day is like the magic figure that indicates robust driving. We've only seen that maybe 4 or 5 weeks this year. In 2019, it was 20 to 30 consecutive weeks. So there isn't the rush to the pumps that lower gasoline prices would make you think would happen. We did a survey back in March of 2018 during a good economy, asking drivers what the pain point was for the price of gasoline. 40% said $3 a gallon back then, right? Then they would have to drive less. They'd cut back on discretionary purchases, things like appliances, that kind of thing. So $3 a gallon, that's pretty cheap.
But is the swing in this case that people are not driving to work every day? I mean, if I just think about the main difference between 2019 and now, travel demand is back. Wouldn't seem to be that. The one big difference is that not everyone's going to the office every day anymore.
That could be it. I just worry that drivers don't have the elasticity in their budgets as a result of inflation, paying for food and shelter. They don't have the money left over for non-essential driving. Non-essential driving.
And maybe that is even also part of, some of it may be habit, but maybe that is part of the pushback on the return to office that some companies are experiencing. But AAA is predicting a rise in demand and travel for this weekend, right?
Well, Americans are hardworking. We get the fewest number of vacation days of any workers in the industrial world. Europe takes all of August off. So when we get a free day, we take advantage of it. So, forget about everything. We're going to take advantage of this holiday and get out and travel. It's going to be the third highest all time. Overall, and the second highest all time, according to our figures, as far as air travel is concerned, exceeding 2019 by 170,000, 3.4 million traveling. And I have to let you know how we measure. We only measure leisure travelers. And if you're making a trip, say, from New York to California, and you're getting a connecting flight in Texas, Some people measure, some organizations measure that as 4 flights. You do the same thing coming back. We measure it as 1.
What's our busiest day this weekend?
Oh, yesterday.
Yesterday.
Yeah.
I thought so. I noticed traffic
that's good
yesterday.
news
We
for me
talked
driving.
about
Oh, but it won't be a picnic today.
Oh, come on, Robert.
Sorry.
Tell me some good news.
Help us when we're leaving here.
I got to ask you about breakdowns because you had some really interesting data as well about the age of U.S. vehicles, whether or not people are taking good enough care of them. What are the implications for breakdowns?
483,000 breakdowns, and that's just of AAA members for this holiday weekend, 5% more than last year. S&P released data a couple of weeks ago that said the average age of a vehicle on the road in the United States is 12.5 years. We know that when you hit 10 years, you're going to start having a lot of problems, your transmission, your cooling system, those kind of things. So I think, and we did another survey also in 2017, 40% of drivers said they didn't have $1,000 for an emergency vehicle repair.
Yeah.
And are they doing the
seen
maintenance?
some of that.
Are they spending on the needed maintenance so that their cars won't be as likely to break down?
No, they are not. And unfortunately, we're going to see flat tires and dead batteries as the top items we get calls for. And it's not only inconvenient, it's dangerous. We see that a lot of people get killed when they're with a disabled vehicle by the side of the road. Many of our roads lack a shoulder. They predate modern transportation engineering. But we are seeing, interestingly, a lower number in terms of the number of calls that we're getting for people who are broken down. So there's going to be a lot this weekend.
Despite the aging vehicle. Yes, we talked about this. We saw one on our way in. We drove in separately, but we saw one on our...
And you drive in.
Yes.
That's very interesting.
Very early. Not every day. This is just
Okay.
because of coming in very early.
Yes.
Yeah,
that makes
and then
sense.
normally traffic is better, but there were certainly some that we faced today. Want to ask you about airline travel. So you all are projecting an increase this kind of kickoff of summer. What are you seeing? What trends are you seeing there?
International travel, very high. As the gentleman from Priceline said, we're seeing 250% increase in international travel bookings. They're going to London, Paris, Rome. They really like river cruises in France and Germany.
Went on one of those.
There you go. So Europe, very popular. I think people have a lot of pent-up demand because of last year and all the problems that they had. You remember last year, all the cancellations and delays.
Right.
It was real bad. Well, now things are in place. The only fly in the ointment might be air traffic control, because a lot of air traffic controllers were laid off during the pandemic. There were far fewer flights. Now they need them. And training is like 2 years long.
Wow.
And the worry is that particularly in New York, we won't have enough air traffic controllers. And I believe the FAA was asking airlines to cut back on the number of flights.
Yep, we talked about that. Yep.
So you have to be careful of that. We've got a lot of good advice for travelers. If they're flying, make sure you have the app of your airline on your phone. Make sure the phone is fully charged. If you have a problem, do not check bags. Use carry-ons in case your flight is canceled or delayed. You'll have your luggage with you. And use the phone number for the international or rewards numbers for your airline. The regular customer service number might get a little busy. So have that other number to call in case you have to make a change. But the weather is good. That's a big X factor. 75%.
Yes, compared to like the holiday season.
Yes, 75% of all weather-related air traffic control delays stem from New York. We've got 6 major airports here. The hub and spoke system means that, something bad happens here. New York sneezes, the whole country catches a cold.
I'm going to keep that. That was really a great tip about calling the
love
international.
the tip.
All the international, the rewards line,
That is a
as long as you
great
get through to somebody.
Right.
Oh, I know the feeling. Robert, what a pleasure to see you in person.
Good to see you. Oh, it's good to be here.
much.
I'm so tired of being at home with Zoom. It's good to see you.
Okay,
we love this.
Good luck getting wherever you need to be next. Robert Sinclair Jr.,
Thank you,
AAA
Robert.
Northeast Senior
Thank you.
Manager. Well, coming up next, financial stress. We've been talking about it. It affects more than half of all Americans, but you don't have to go it alone. We've got some tips to keep your money woes under control. Let's do a quick check of the market, sponsored by Flex Shares. We have actually a little bit of an extension of gains here today. Look at that. The Nasdaq now up almost 1.5%, and the S&P and the Dow have now joined the 1% party too. We see all three major averages gaining. Not sure if that's enough to wipe out the S&P's losses for the week. We'll have to wait till the closing bell to make that determination. Well, with the looming recession, debt ceiling ex-date, and rising interest rates, there's a lot to be worried about right now. In a recent bank rate survey, 52% of American adults said that money has a negative impact on their mental health. That's up from 42% just last year. As Mental Health Awareness Month comes to a close, we're taking a closer look at how folks can manage their financial stress. Joining us now is Megan Lertz, Kansas State University professor of practice and former president of the Financial Therapy Association, and Michael Learsch, who's Wells Fargo head of advice and planning. Megan, I want to start with you. I mean, money is sort of one of those perennial things we think about as a source of worry. What is the sort of number one tip you give to people to try to cope with that stress?
Well, I think that's an important thing. So we oftentimes think of like fight, flight, freeze. And the fourth, there's another F word, and it's flock. You know, when we are stressed out, we tend to do this anyway. You know, you had a long day, call your spouse. Your spouse can't really fix your long day, but it feels good to kind of spread that stress out a little bit, share it with someone else. Money is oftentimes a difficult thing to talk about, but what makes it 10 times harder is when we keep it all inside, when we try to hold that stress by ourselves, when we try to hold that anxiety by ourselves, it just feels more isolating. And so one of the best tips would be to speak with a spouse, you know, or a partner, speak with your mom, or hopefully you're working with a professional financial professional of some kind, be it a CPA or a financial planner, and give them a call, you know, talk to them. They have seen markets do crazy things before. You know, we've all sadly been through a recession. We've all been through interest rate hike. We've all been through many of these experiences before. And so just talking to someone else, spreading out some of that stress with another can be really, really powerful.
Michael, I want to bring you into this, Diane here. So let me ask you about some of the tips that you would bring to the table. And I want to touch on some kind of more practical tips. I do think you do need to talk about things. You got to get things out in the open. You can't put your head in the sand, especially because some of the things that stand out in particular in this bank rate survey is concerns about inflation, despite a strong job market, also concerns about job stability. There were also just concerns about paying everyday expenses. That's the inflation piece, debt, housing, et cetera, not just having enough even for discretionary spending. So what are the top three things you would say to Americans, et cetera, with regard to managing this stress?
The first one is to really question whether you need to be doom scrolling on your mobile device. So to your point, we did a survey at Wells Fargo last year where we asked people, you know, what are you doing when it comes to monitoring your financial life? And a lot of people are just going on their mobile device and looking at the markets, looking at their account values, and doing what's called doom scrolling and waiting for, let's say, the next shoe to drop. So I would encourage everyone to say, instead of doing that, focus on what's in your control, which are the snackable little things you can do to make your financial life more tenable, or to the points that were made, less anxiety ridden. So when you think about that, there are three key things I would highlight. The first one is really think about how you are spending money that's optional. And is that optional money, is it really required at this time? Or can you allocate it more, to your point, to those more essential items so that you don't feel as stressed about the gas prices that you're paying or the groceries that you're buying? The second thing is really to the point of don't go it alone with a spouse or a partner in terms of talking about money. Don't go it alone with your family and friends. You know, really question whether you need to buy those gifts for those events. Really question whether you need to go out to dinner. Really think about how you can get together and do things in a very let's say, empowering way. And you see that in TikTok right now. There are 60-second videos where people are talking about those things very openly, tens of millions of people. So be encouraged by that social power that you have in a positive way to make the most of your money. And the third thing that I would really suggest people do is really think about where your money's coming from and how much you have coming in. Think about where your money is and how much you have, and then think about where your money's going, meaning what you're spending, again, on essential things versus more discretionary or optional things, and see if those things all match, meaning if you're spending more than you have coming in, really consider how you can make very small changes. So renegotiate your streaming services, renegotiate, think of it as traditional cable, whatever that is, look at what you're paying for your phone, your family pricing, call those services and say, hey, I want to become a customer or stay a customer. And can you give me a price break? And those small incremental changes can actually reduce anxiety and put more money in your family's pocket and your pocket.
Yeah, some really good actionable tips there. Megan, I want to bring you back into this. One of the things, we've talked a lot about anxiety. I want to talk a little bit about guilt also, because there was this sort of narrative for a while, oh, just don't buy your coffee every day and you'll be fine. But like, people value those small things, and then then there's this guilt when you're doing those small things. So how do you sort of manage around that?
Yeah. Well, first, I think it's helpful to just differentiate between stress and anxiety. They're often comorbid. They show up together, but they themselves are different. Stress, this is why stress happens in some people and not in others. It's an outside force. Like, something's happened on the outside and you evaluate, can I handle this or can I not? And if you can't, stress arises. Anxiety is more of an internal thing, which can come from having had stress, and then we're worried about that going forward. And as it relates to guilt and sort of shame spending and things like this that we see, cutting your coffee and things like that, this makes people so unhappy and makes them very unhappy about their life. And so I think it's more useful to turn to research about happiness and what happy people are doing. There was a great book that just came out from the Harvard psychologists. It's called The Good Life. It's based on their longitudinal study. And you should read the book. The book is great. But if I could summarize the book in one sentence, it says, have experiences with people that you love and that love you. And so if having a cup of coffee, I'm one of those people, I've got it right here. I have to have a cup of coffee every morning. And my morning is usually with my kids in my bed, having a cup of coffee, and it brings so much contentment to my life. And so if you need that moment in the morning with your cup of joe, please have it. Don't let that be the thing that restricts you. Those are moments that are really important, that can actually lower anxiety, help build up self-efficacy, just help you feel good about getting your day started. When you have to start your day off with, well, can't go to Starbucks, and now I have this drive that I have to go on, and I'm mad about that. Well, by the time you get to your office, you're going to be like, where are the cookies? I no longer have, any more self-restraint because you're so tired and from trying to not have your coffee. So it just kind of perpetuates like either the spending, you'll take yourself out to lunch because you didn't get to have coffee. So if there are things in your life, that are bringing you joy, that are part of an experience that helps to bring you calm, experiences with people. I thought that the suggestion earlier about, not necessarily going out to dinner, but could there be a way that you could cook with friends and family at home? We love to eat, we love warm drinks. I think that keeping those things in mind, like when it's an experience, don't take that away from yourself. It only perpetuates kind of the lack of self-control that you'll have later in the day for perhaps the harder things. I'd rather people have a $3 cup of coffee or a $5 cup of coffee than a $25 lunch.
Well, it's not 3 or 5 anymore at Starbucks. It used to be, once upon a time, used to be $4. Now it's $6+. And I will say, personally, I've done that before, completely I cut out Starbucks for a year, an entire year, because it was just one of those things that, to me, I do love my caffeine in the morning, but I just found a cheaper way for a little while. I've been back to Starbucks, not every day now. Michael, I want to bring you back into this really quickly, and just want want to ask you, we're in front of a big spending weekend, which could end up causing some people stress when they look back at what happened this weekend. Where did the money go? What's your advice for people heading into this kickoff of summer weekend?
I think the big piece of advice I would give to people is really to be intentional. And that's what we're talking about here. When it comes to happiness, when it comes to stress, when it comes to anxiety, whatever those feelings are, really be intentional about what brings you and your family joy and focus on spending with respect to those things that are bringing you joy and the people that you're surrounded with joy. So that would be my core advice. The second piece would be anytime you can bring in your entire family in a weekend like this to the table around what you're spending on and why, it'll just make that conversation easier going forward. So use this as an example. How much are you spending on that barbecue? Who are you inviting? Can you afford it? And those kinds of things give you energy and your family energy to think more intentionally in the future and more collaboratively. So you're all in it together, and to the point of making things fun versus not fun, make it a family meeting, make it fun. Talk about money, talk about how important it is for you all to feel good, safe, and financially secure, and make it a family affair.
Yeah, that's a really good point that, money for a long time was not something you talked about. And I think that openness is a really important point. Megan Lertz, Kansas State University professor of practice and former president of the Financial Therapy Association, and Michael Learsch, Wells Fargo head of advice and planning. Thanks to you both, and have a great weekend, both of you.
You too. Thank you.
Let's take a quick look at stocks as we await, hopefully, a debt ceiling resolution. We got stocks pushing ever higher here on this Friday. Maybe there are some hopes that we're closer to the finish line. We shall see. Coming up on our 3 p.m. show, summer has begun. If you're looking to plan that big vacation, stay tuned. Matt Goldberg, TripAdvisor CEO, joins to discuss all things travel.
Yes, indeed.
Have a great weekend.
Let's turn now to one of the most colossal financial fallouts in recent history, the rise and fall of Theranos founder Elizabeth Holmes. In 2021, Yahoo Finance produced the Elizabeth Holmes documentary, Valley of Hype. And now the final chapter of that story is expected to begin on Tuesday, when the former Silicon Valley blood testing entrepreneur is ordered to report to federal prison. Yahoo Finance's Alexis Keenan is here to bring us up to date.
That Tuesday deadline, it's fast approaching for Elizabeth Holmes after last week a federal appeals court in California denied her request to stay out of prison while she appeals her case. And last year in January, a jury convicted the former billionaire on 4 of 11 felony counts of defrauding investors who together poured hundreds of millions of dollars into her blood testing startup. Holmes' jury returned not guilty verdicts on charges of defrauding Theranos patients, and charges alleging fraud against doctors were dismissed. Also convicted in the scheme, Holmes' former boyfriend and Theranos COO, Ramesh Sunny Belwani. A separate jury found Belwani guilty on 12 of 12 counts of investor and patient fraud. But all told, Theranos once reached a valuation of $9 billion before its technology was exposed as overhyped. In November, a judge then sentenced Holmes to serve 11 years and 3 months in federal prison. Belwani, for his part, was sentenced to serve nearly 13 years behind bars. So here's a look back at how it all happened, and I'll be back here on Tuesday when Elizabeth Holmes is expected to say goodbye to her family and now 2 young children in California and report to a federal prison in Bryan, Texas.
Asking yourself whether you're wrong is a really good thing. If you really feel strong conviction that you're doing the right thing, then keep going.
That ideology is shared by some of the world's most ambitious creators who flock to Northern California with a dream. They seek like-minded encouragement to move fast and break things, and even fake it until they make it. Those principles can come at a cost, always for investors, often for entrepreneurs and their employees, and sometimes for the public at large. And for one entrepreneur, once lauded the world's youngest self-made female billionaire, the cost could add up to years in federal prison.
This is Silicon Valley, a hub of innovation that's often coupled with sleight of hand. I'm Alexis Keenan, and this is Yahoo Finance Presents. Nearly $1 billion gone bust, swallowed by the opaque Silicon Valley biotech startup Theranos, whose founder Elizabeth Holmes faces years in prison for a pitch pushed to extremes.
I knew that I could do something that would be different than what everybody else is doing.
She said her technology would revolutionize healthcare, miniaturizing a suite of common blood tests down to a few drops. The technique would democratize diagnostics, driving down cost to make tests so affordable that consumers could access periodic snapshots of their personal health over time. It was a story that Holmes told with unwavering conviction.
If you watched a movie and you took one frame out of that movie, and you said, okay, Elizabeth, tell me the story, I would never be able to tell you that story, but if you gave me a series of frames, I could begin to piece together a story.
The concept captivated investors and media and turned Holmes into a startup sensation, though her stardust began to settle when the Wall Street Journal exposed frames of her story as technology overhyped. The reckoning fueled a barrage of scathing news reports, a New York Times bestseller, and a feature documentary, leaving Holmes accused of fraud, of peddling impossible science, and portrayed a vixen.
Her confident charm and even physical appearance were cited to explain why distinguished advisors and hopeful investors in a male-dominated field bought what she was selling. Yet not everyone is convinced that Holmes was just a persuasive pretty face, or that her methods to materialize her vision should be viewed in black and white.
This is going to sound a little strong, but to a certain degree, she's a victim, because she didn't know what she didn't know. And she relied on people who gave her bad advice or mismanaged it, I think.
Even for Theranos, I'm not 100% convinced that it is fraud, although we have lots of leads that many things were wrong.
The first crazy concept that we had that people said absolutely could not be done, especially when I tried to raise money for the first time to start the company, was wanted to change the way lab testing was done. If you're going to start a company, the first question is why, right? For me, it was, this is a change in the world that I want to see.
The change was never realized, at least not by Theranos. Instead, the company imploded under a raft of lawsuits, regulatory actions, and SEC fines, all targeting Holmes for promising more than she could prove. Yet holding Holmes to both criminal charges and such intense media scrutiny could ultimately be what makes her unique as a Silicon Valley entrepreneur and may overshadow her pioneering role in an emerging biotech field.
The biggest concern I've had with the media was, immediately after Theranos started falling apart, there was a rumble of people saying, well, this was such a bad idea, this could never happen. Or actually, really, I think Elizabeth's vision was phenomenal, right? And I share the same vision, and so I really resonate with that. I think it is a good idea, and it needs to be, it needs to happen.
It was all doable. I mean, that's the other thing. There wasn't any engineering problem that couldn't be resolved by the time I came in the company. There was refinements. I think with a different board, maybe with a different COO, with somebody to coach her and help develop her as a CEO and a spokesperson, I think a lot of this could have been avoided.
In a culture that handsomely rewards innovators while embracing this fake-it-till-you-make-it ethos, who deserves to shoulder the blame? Prosecutors say it's Holmes and her former boyfriend and Theranos COO Sunny Balwani for allegedly operating the once-hyped blood testing company as a criminal scheme that defrauded investors, doctors, and patients. Others, including one of Theranos' earliest critics, say the answer is not as clear and take into account a system known to conflate optimism with reality.
I suspect that there's many other companies that don't really have the ideas that they propose that they have. They're still working on them. They haven't tested them out. They are probably over-optimistic, and maybe most of these ideas would fail. I don't think that Theranos is an exception in that regard.
If Theranos is no exception, how strongly will criminal accusations hold up? And where will jurors draw the line between an entrepreneur's push for disruption and fraudulent deception?
But I'm sure the courts are going to place a different standard on it than I do. But my standard is, if an entrepreneur makes a claim and you want to invest, it's your obligation to go validate all the claims she's made. She may have made exorbitant statements, but those could have all been corroborated before the money was invested. And in fact, if somebody had done the work to try to corroborate them, they would have found out they're really exorbitant. They're wishful, and they're futuristic, and they don't represent the present. If you invested based on those claims, you would have said, okay, that's fraud.
If Holmes' strategy was to temporarily fake it, how different were her tactics from her Silicon Valley peers? When did the alleged charade begin? Why did financial backers keep her company afloat for more than a decade? And what lessons should future investors learn? The answers lie in a tangle of conflicting symptoms that can give investors reason for confidence as well as caution in the traditions of seed capital-rich Silicon Valley. Disruption often begins like this. An aspiring creator claims their vision for a new reality, then sets out to piece together the missing parts to their puzzle.
What we wanted to change was the fact that when you find out you're sick, you're already too sick in many cases to be able to really change the course of the disease. The way you change that is that you have to reinvent every element of the system, which means you have to reinvent the tests, you have to reinvent the devices, you have to reinvent the software, you have to reinvent the locations through which the testing is provided, the pricing. So this was not a short-term business plan.
And there's one place, perhaps more than anywhere else in the world, that fosters the rapid incarnation of these bold ideas.
This is the Valley of Dreams, right? It's a unique situation. There is no other place in the world where somebody with a big idea can come and have access to capital, have access to all of the corporate services you need to get it off the ground. So people come here with big dreams. And I think Elizabeth had a great big dream.
This region of resources, in its early days known as the Santa Clara Valley, was formed by generations of tech pioneers whose ideas were brought to life with the help of deep pockets.
The Silicon Valley was just another little agricultural valley in California through the middle part of the 20th century. And the thing that changed it all was World War II and the Cold War. The government did something that it hadn't done before. In the big way, it got into the research and development business, and particularly put an immense amount of money into research in electronics and computing.
It was decades before the blockbuster successes of Valley tech icons Steve Jobs, Bill Hewlett, and David Packard, when the Valley's founding fathers put the federal government's money to use.
The startup that brought silicon into Silicon Valley was a short-lived operation called Shockley Semiconductor. And the person who founded it was William Shockley. He was a co-inventor of the transistor.
A veteran of telecom behemoth Bell Labs, Shockley realized the power of silicon to miniaturize transistors that by the mid-1950s helped power the world's first microchips.
And so the Valley gets more and more significant in the landscape of tech.
By 1957, Shockley's team founded its own startup, Fairchild Semiconductor. Instead of turning to the federal government, the group made a radical move and looked to the private market, securing funding courtesy of East Coast investment banker Arthur Rock.
Arthur Rock later becomes one of the most legendary venture capitalists in Silicon Valley history.
That same year, the microchip earned a reputation as indispensable as the Soviet Union launched its Sputnik satellite,
the first artificial Earth satellite,
beating the U.S. into orbit.
This basically lights Washington, D.C.'s hair on fire, and all of this money starts getting invested in rockets and missiles and technologies to get things and people out into space and ultimately to the moon.
In shooting for the moon, the influence of Santa Clara Valley technology and the investment dollars it attracted were forever altered. The region had officially left behind its agricultural roots to become a tech and investment hub. A next generation would prove what silicon could do, not just for big business and government, but for the individual.
Who has all the computers? The establishment, the government, big corporations.
Key players to that independent movement were two Fairchild alums, Bob Noyce and Gordon Moore, who in the late 1960s founded Intel to build memory chips. They too tapped venture capitalist Arthur Rock, whose $2.5 million stake advanced the uniquely American concept of partnering wealthy investors with tech entrepreneurs. The concept would carry into the next millennia to prop up countless enterprising founders, including Elizabeth Holmes.
So once you have a computer on a chip, you can build a wooden box around it, and it's a desktop computer, and it's under your control. It's not under the university's control or the Pentagon's control. And look, it's Vietnam, it's Watergate. This is an anti-establishment moment in American culture.
That movement gave rise in the mid-1970s to computer enthusiasts Steve Wozniak and Steve Jobs. With Noyce's help, Jobs and Wozniak secured funding for a first personal computer, the Apple, through investor Mike Markkula, and later through Sequoia Capital, that would evolve into one of the region's most profitable VCs.
The venture capital becomes an important glue between the generations, right? Who are the leading venture capitalists of today? There are people who had these massive exits in the 90s, who in turn were funded and mentored by people who had massive exits in the 80s and 70s.
These generational networks reinforce Silicon Valley's tightly knit circles and its backlash against corporate business as usual.
You can't have total corporate misbehavior in order to be successful, but at the same time, there's this encouragement and cultivation and tolerance of behavior that might get you kicked out of a traditional company. Silicon Valley has a strong sense of itself from the very beginning as not being like other companies. This is a different sort of business. We think different, we do things differently, and we have amazing results as a result.
Even investors have been known to play by their own rules.
The venture capitalists themselves did not want to sue Theranos. And there's a reason for that. It's because they all live in Silicon Valley, and if they sue a company that they've invested in, they're not going to get the next deal.
Plaintiff's attorney Reed Cathrine represented individual investors who did sue Theranos, claiming fraud. 2 late-stage minority backers who bought company shares indirectly and complained they relied on false claims. The sole venture capital firm to sue Theranos was one of its largest investors, Partner Fund Management. It brought 2 lawsuits that ended in settlement.
It's very important for the venture capitalists to be able to get the next deal, to get the next Google, to be able to be one of the first to invest.
That was already a well-established part of Valley culture by the time Steve Jobs comes along. There were lots of arrogant jerks in the semiconductor industry, and part of the culture of the chip makers, the semiconductor makers, was if someone was producing amazing technology, you were kind of going to let them get away with murder.
In hindsight, a predictable setting for the whirlwind ascent of Elizabeth Holmes and for her meteoric fall.
When we began Theranos, what we focused on was creating a customized medicine tool that could be used in the home. The ability to begin bringing monitoring, as we call it, into the home, we believe could fundamentally change the way that both patients are treated as well as drugs are developed.
That was Elizabeth Holmes in 2005, one of the few times early on that she spoke publicly about her ambitions.
I think it all starts with a very unique kind of founder who truly has a passionate, burning conviction that they've come up with an idea that will change the world. And they have the soaring ambition to just be driven to want to make it happen as fast as possible.
Conviction spurred Holmes to drop out of Stanford University. In 2003, the 19-year-old traded in life as a full-time undergrad for life as a full-time CEO.
I'd always believed that the purpose of building something, building a company, is to make a difference in the world. And I got to the point in which I found what I felt like I was born to do.
As if ripped from a playbook for Silicon Valley superstardom, Holmes' early college departure followed in the footsteps of Oracle's Larry Ellison and Apple's Steve Jobs. Another Holmes-era dropout included Facebook's Mark Zuckerberg, who in 2004 cut his time short at Harvard.
There was a lot of money left over from the dot-com boom. You have PayPal being acquired by eBay, turning the founders of PayPal, who become known as the PayPal Mafia, into multimillionaires. And that includes people like Peter Thiel, Elon Musk, Reid Hoffman, Jeremy Stoppelman, like all these people who go on to found other companies in the Valley.
Who didn't graduate college and left college at 19 years old? We have Bill Gates, we have Steve Jobs, we have Mark Zuckerberg.
Holmes filed her first patent around the same time she sidestepped her college career. A wearable monitor with skin-piercing microneedles to detect biological red flags and deliver therapeutic drugs. By the next year, in 2005, investment capital was rolling in.
Now, how much money have you raised thus far in venture capital funds?
We raised just over $6 million, and then we've also raised money from private investors.
Factoring for inflation, the figure dwarfed even Apple Computer's first money raise in 1977, a $250,000 investment, much of which was structured as a loan. With many fewer strings attached, investors bet big on Holmes.
Yeah, so in the beginning, it was Don Lucas, very seasoned venture capital guy. I'm sure I don't know the details, but I know Don's reputation well enough to know he probably did excellent due diligence.
Well, the first guy really was Don Lucas Sr., who had originally been an investor in Oracle. But at this point in time, I think he was sort of not fully paying attention to what's going on.
However well vetted, the apparent confidence was contagious. Billionaire venture capitalist Tim Draper backed Holmes, as did billionaire Oracle co-founder Larry Ellison.
What was fundraising like?
Finding the right people to invest in you, I think, is everything.
To find the right people, Holmes didn't need to look far. Draper had been a family friend, and other deep-pocketed investors traced directly to Holmes' alma mater.
Stanford's biggest, most important product isn't tech, it's people. Look through the whole genealogy of Silicon Valley, starting with Hewlett and Packard, who were Stanford students there in the 30s. And you have access to incredible resources, professors, business people coming to campus. Modern Stanford has become this town square for billionaires, right? It's this place where you rub shoulders with incredibly successful people, and they're telling you, this is how you can be like me.
The exclusive access held another secret to Holmes' initial success. Prominent backers gave rise to an impressive board, including former U.S. Secretaries of State Henry Kissinger, the late George Shultz, and former Secretaries of Defense William Perry and General James Mattis.
Like, the only person missing from your board is the Pope. How did that happen? Was it like, I'm just going to write to Henry Kissinger? These kind of caliber of people who are in the public eye, but probably not so easy to ring up.
In our case, those were people who I had the privilege of getting to know and in many cases working with for, in some cases, a couple of years before we asked them to join the board.
Once one got on board and was sold by, the others were sold by him. They're all related to the Hoover Institution for the most part.
Which is stocked with former heads of state and very powerful people, people who've had incredible political careers and military careers, who also have, in turn, connections to the business community and instill credibility on a very young, untested person.
For all its privilege, the early board was mostly devoid of expertise in diagnostic testing, biochemistry, and molecular biology.
At least in its initial composition, practically they had no scientists who were relevant to the topic of what that startup was about. They had powerful people who could really sway power across many constituents and probably facilitate investors to send their money to Theranos and open lots of doors and gain publicity. But they had no science. They had no science, and they had no board to tell them that they have no science.
One exception was Holmes' college mentor and first director, then Stanford Chemical Engineering Dean and Professor Channing Robertson.
I think he gave the credibility that these investors needed.
I hired the person that I was working for at Stanford, and
that's a wonderful story, isn't it?
Yeah.
Huh.
It was great.
Like entrepreneurs before her, Holmes tweaked her concept along the way. Within 2 years of leaving Stanford, her patent applications included a portable analyzer that would quickly and inexpensively test biological fluids, including blood.
I got interested in blood and lab testing because it's a tool, and the ability to dramatically reduce the sample volume that's required for doing lab testing traditionally and dramatically reduce the cost.
Holmes' portable analyzer first became known as the Edison and later as the Mini Lab. In its first iteration, the device would cater to pharmaceutical companies to test adverse drug reactions in clinical trials. Later versions would serve doctors and patients, replacing the bulk of traditional lab testing altogether.
Instead of having to go to a lab in order to give blood, we're actually going to begin to make it possible for people to do lab testing in the places they need care.
Instead of large needles, vials of blood, and days-long processing times, Holmes envisioned that doctors and patients could draw just a few drops of blood using a fingerstick sample stored in the company's proprietary nanotainer and get immediate results for an array of common blood tests.
The product is meant for an individual to actually conduct a blood test, ultimately at home. And the box is about the size of a printer, desktop printer. So it's probably maybe 18 inches long and 15 inches wide and 12 inches tall.
Holmes' pivot to engineer a desktop analyzer came with a mountain of electrical, chemical, and bioengineering challenges. The vision was so ambitious that critics, including Theranos employees, said it couldn't be done. Added hurdles came from Richard Fuse, a Holmes family friend 30-plus years her senior, who filed a patent to seize upon an overlooked element in the would-be analyzer's supply chain. Holmes later sued Fuse, accusing him of creating the patent with stolen Theranos IP. By 2010, 5 years into her pursuit, there was light at the end of the tunnel. After struggling to stay afloat, Holmes reported to the SEC that Theranos had sold $45 million in private company shares, and a $12 million line of credit came from Holmes' then significant other, Sunny Balwani, a dot-com-era millionaire who Holmes had recently hired as Theranos' COO.
So I actually think the impact of what we are doing to put the diagnosis right there where the patient is, this invention is going to be way up there. We will have the same impact on human health and medicine as the discovery of antibiotics had.
Balwani and Holmes first became friends in 2002. Balwani was 37 and Holmes 19. The two became a couple after Holmes left Stanford.
She didn't choose Sunny, really. The board made her go hire somebody, and Sunny looked good on paper.
The couple was criticized for going to great lengths to keep their romantic relationship a secret.
That was ridiculous. This is part of the naivete. The way the company found out that she and Sunny were having a relationship, she changed her home mailing address to be his.
She never told the board, and once we began to see the documents and the communications between them, it became very clear.
In an unfruitful deposition, Catherine pressed Holmes to explain.
Can you tell me whether or not you had a romantic relationship with Sunny Balwani?
Again, due to the pending charges by the Department of Justice, I am instructing Elizabeth to invoke her Fifth Amendment rights and not answer.
Did you ever get an answer to those questions?
No. She pled the Fifth.
The partnership continued until 2016, when Balwani left the company. The dynamic is likely to come into focus in Balwani and Holmes' now separately scheduled trials. According to court documents, Holmes intends to introduce evidence concerning her mental state during her time as CEO. In 2013, Holmes and Balwani struck an equally puzzling business partnership. Theranos announced a major deal with drugstore giant Walgreens to deploy the device in its Palo Alto and Arizona stores, despite the device's design for home and doctor's office use. Under a $140 million contract, Walgreens would become the exclusive pharmacy to offer Theranos tests, and someday in more than 8,000 U.S. stores.
Walgreens got enamored with the notion of putting one in every store so that you as a customer could come in and have your blood test done while you shop.
In a carefully worded press release, the companies said consumers can now complete any clinician-directed lab test with as little as a few drops of blood, with results available in a matter of hours. It went on to say that blood samples would be drawn either from a tiny finger stick or a microsample using traditional methods. The Walgreens partnership made Holmes a darling of business and tech media. Her story catapulted to the covers of magazines and to the front pages of newspapers. Under Holmes and Balwani's management, in 2014, Theranos' funding spiked to $400 million.
She was on every cover looking her Steve Jobs best. Everyone called her the next Steve Jobs, and it was just wonderful. I mean, I don't know a CEO who wouldn't kill to have that kind of positive publicity.
Wired first reported Theranos' analyzer could perform hundreds of blood tests, and as many as 30 from a single drop. Holmes soon boasted to Fortune that 70 different tests were possible from a fingerstick sample, and that Theranos offered more than 200 common tests. The bold claims elevated Holmes to her first cover feature.
I was the editor, Tim was the story editor, and Roger Parloff was the writer. And we were excited about it. It sounded, just like everyone else said back then. I mean, this was like the next big thing, and there was a lot of enthusiasm about it and a lot of interest, certainly.
It was already a good-sized company with 500 employees. It was represented by David Boies, who at that time was sort of the preeminent attorney in the country, and it had backing from Larry Ellison and Betsy DeVos.
TechCrunch also interviewed Holmes in the peak of her company's ascent.
This is the amount of blood that's needed to draw to do a test.
A lot of private companies were getting a significant amount of funding. So I think it was, valuations were just high across the board, and there was a sense, there was a lack of circumspection, I guess, around what was going on in the industry.
Forbes followed suit, publishing a cover feature of its own.
They were kind of saying she may be the next big thing, like visionary, guru, Silicon Valley, big deal, young. A lot of CEOs, sometimes they can be very controlling, and she just had none of that. I think even at that point, Forbes was already telling me that she was apparently America's youngest self-made female billionaire.
The coming out party lasted nearly 2 years, as Holmes purported to disrupt the multi-billion-dollar diagnostics industry dominated by companies like Quest, LabCorp, Siemens, and Abbott. Meanwhile, Walgreens customers relied on Theranos-branded tests, and the company's valuation soared to $9 billion. The company grew to more than 800 people on its payroll, including former Apple OS X developer Avi Tevanian, eventually asked to resign from the Theranos board, and chief scientist Ian Gibbons, a 30-year biochemistry expert who in 2013 took his life after receiving a subpoena to testify in the patent dispute with Holmes' former family friend.
There's a little bit of irony in the photograph now. It's like the firehouse catching on fire. What you're seeing in that photograph, it's exactly what is not supposed to happen.
By that time, U.S. attorneys say Holmes was peddling a fraud. The accusation was first waged in an October 2015 Wall Street Journal expose. Reporter John Carreyrou skewered Holmes' claims that her technology could accurately process hundreds of tests using the fingerstick technique.
It really wasn't until John Carreyrou's story in the Wall Street Journal came out that we had any understanding that there was less here than met the eye.
Whistleblowers who informed Carreyrou's reporting compounded the damage, claiming the analyzer returned enough false positive and false negative results that the company was forced to run all but one test on traditional equipment made by the very companies Holmes aimed to disrupt.
Even if you could test blood on third-party equipment, they were diluting that blood on equipment that was not made for diluting that blood. Their defense was, well, we did have the technology, and it was not on our box, but it was on third-party equipment in their testing and in their quality assurance and all the things you're supposed to do at a lab. They were, if the numbers didn't work out, they were playing with the samples they used, and it's questionable.
At the heart of the Justice Department's indictment are accusations that Holmes and Belwani lied about Theranos technology to dupe investors and business partners into forking over cash and to dupe patients into paying for Walgreens-based tests. Claims further examined in Carreyrou's nonfiction book, Bad Blood, and in Alex Gibney's documentary, The Inventor.
Well, and the question is, did she know she was perpetuating a fraud, or was there something more mysterious going on? I think she is afflicted with what the police call noble cause corruption, meaning, simply put, it's like the end justifies the means.
Holmes and Belwani's knowledge will be key to their defense, given prosecutors' burden to prove intent, a non-negotiable element required to obtain a conviction.
Well, that's what makes this a difficult story to draw conclusions about in terms of investment fraud, because I don't think anyone disbelieved this story, including Elizabeth Holmes, at the outset.
By 2010, 7 years after Holmes started Theranos, is when U.S. attorneys say she and Belwani began a conspiracy that by 2015 would include lying to investors about the range and accuracy of tests, faking product demonstrations, misrepresenting projected revenues, and fabricating stories that Theranos' device had been deployed in military combat zones. By 2013, prosecutors say the two knowingly promoted and delivered tests likely to contain inaccuracies and falsely represented to investors that the tests did not require FDA approval, a point Home has contested, along with pleading not guilty to criminal charges.
When I started, they had scrapped the Edison device, so we were working on the next generation, black box.
It was 2015, a month before Carrie Rue revealed what Jocelyn Bailey and other Theranos employees already knew. More than 90% of Walgreens-based tests use neither the mini lab nor tiny blood samples, and instead came from traditional larger volume blood draws processed by traditional analyzers made by Siemens. Bailey's job was to develop immunoassays, a common type of blood test intended to run inside the mini lab.
Did you know about the Siemens machines being used while you were working there?
Yeah, we knew. I think it was communicated to me, yeah. Our team knew about it. I don't know if everyone knew. We knew that finger sticks had been cut real recently from the clinics. Some of those original claims were known. It hurts, but we knew it and we were in the lab trying to make it better.
The revelations turned Fortune's cover story on its head.
It became clear that they couldn't accomplish the tests that they wanted to using the Edison machine. Then, in fairly short order, it unraveled when some of the technicians blew the whistle on it.
One whistleblower, Tyler Schultz, a Theranos employee and grandson to board member George Schultz, disclosed the shortcoming to the Wall Street Journal and filed a complaint with New York State's Department of Health saying the company had manipulated proficiency testing, a process meant to promote test accuracy. At a minimum, if the Theranos Walgreens 2013 press release and Home's statements to media were to be believed, with as little as a few drops of blood, its device should have been able to accurately process multiple, if not more than 200 common diagnostic tests.
Did it make you question the technology or not necessarily?
You definitely realize that 220 assays on a single drop of blood on the same machine that you developed, that's not feasible. And so you realize if their goal was to have it in all these wellness centers and have the price be cheap and all this kind of stuff, you understood why they were using these commercial analyzers. You didn't realize, I guess, the extent of how much they had pitched their own machine and how the public was understanding that everything was being done on our technology.
When reporters pressed Holmes on the inconsistencies, she admitted that only one fingerstick test was commercially available using the mini lab, a single assay for herpes virus HSV1. The rest, Holmes said, remained in R&D or awaited approval. In 2016, the Centers for Medicare and Medicaid notified Theranos of laboratory deficiencies, posing immediate jeopardy to patient health. The agency sanctioned the company and agreed to a settlement, banning Holmes from owning or operating a clinical lab for 2 years. The agreement forced the company to shutter its Walgreens and laboratory operations. Holmes' defense wasn't enough to quiet her most formidable critics. A flood of lawsuits followed. Arizona's Attorney General, investors, and the SEC claimed fraud. Walgreens sued for breach of contract, and the Justice Department filed criminal charges for conspiracy and wire fraud.
Did Holmes ever explain to you why she maybe embellished what her product could do?
No, although she didn't have to. It's not uncommon for entrepreneurs in particular to talk in the present tense about the future. My product can do this. Well, your product's not built yet. Your product is a bunch of concept. But nonetheless, the tendency is to say, my product can do this, or my service can unify people. But no, it's a way of essentially describing a future vision. And Elizabeth was very good at that.
Aside from the DOJ's criminal action and a civil suit filed by Theranos customers, Holmes settled the lawsuits out of court. The company paid Walgreens around $25 million to settle its breach of contract claim, and separately agreed to pay nearly $5 million to Arizona customers. A $500,000 fine was paid to settle the SEC's claims of fraud. Among other stipulations, Holmes relinquished her controlling stake in Theranos and diverged from Belwani, who continued to defend the SEC's claims. Cathrine said his clients recouped their investments. Still, most of the $900 million Holmes raised came from investors who took no legal action against her.
So they all sort of circled the wagons around Theranos and didn't go after him. In fact, they did reach an agreement not to go after him early on.
That overwhelming capitulation by the very investors who prosecutors say were victims of fraud begs closer examination of Silicon Valley's status quo and the contributing roles of the parties that power its big ideas.
Of course, I have to blame Sonny Belwani and Elizabeth Holmes. I mean, they're the primary two. I mean, they're the co-conspirators who created this mess.
You can't do it alone. She was and is a singular figure, and she does bear responsibility. I mean, even as young as she was, she bears responsibility for what happened under her watch. Oh, look, there's so many other people went along with her. You know, so many other people wanted it to happen. You know, she will say in her defense, you know, it wasn't me alone. And that's true. It's true of every entrepreneur. It's never them alone.
Where do you put Sonny Belwani in all of this?
I think he's really critical. He's in some ways, the bad cop to her good cop. And we often, in the case of tech companies, there's many instances of the man behind the curtain or the more silent partner. And you saw that at Apple with Steve and Steve. You see this at Microsoft with Paul Allen, writing BASIC, and Bill Gates.
I'm not sure the investors were wrong because I'm not sure they ever fulfilled their own obligations and responsibilities.
Venture capital, kind of the rule of thumb of VC is that out of 10 investments, you'll have 3 that fail, you'll have 3 that kind of go, fine, and you'll have 1 or 2 that actually make you money and sometimes make you a lot of money. And what makes the risk worth it is when you hit big.
The investment money was good eventually because it gives runway for scientists. So she did a good job at getting some runway later. But the first round of the technology obviously was a massive failure and was terrible for patients. But she did a good job at setting a vision for scientists to work towards to allow, a lot of companies don't have that much funding.
In private company investing, the prospective investor has to fill out a very detailed form that says, I understand the risks. I understand that, I may not get any return on this. I understand, furthermore, this will not affect my net worth.
They're accredited.
They're accredited. Sophisticated, actually, I think is the term, but and nobody did. I mean, they all filled out the form, but nobody did the work. I didn't see them storming the gates and going after the board saying, hey guys, you got to, in fact, the board was telling Elizabeth, you don't have to do that, which I think she got bad advice.
In announcing its settlement with Holmes, the SEC posed Theranos as a lesson for entrepreneurs, warning that innovators who seek to revolutionize and disrupt an industry must tell investors the truth about what their technology can do today, not just what they hope it might do someday.
I believe that the SEC did not have jurisdiction. I think the SEC has got a great role to play in public markets and all kinds of other things like that. But I'd hate to see them get deep into the venture community and the startup world. It's a fine line between that and, the mom and pop business, believe it or not.
There are some people who say that Elizabeth Holmes is being held to a public company standard. Do you think that that's a valid argument?
I think there's some merit in that. One of the things, particularly the last decade of Silicon Valley, kind of the decade since the Great Recession, that has been different has been the private markets have dominated more than the public markets. Companies would go public, they'd have to go public. I mean, Intel went public when it was 3 years old, Netscape went public when it was less than 2. The way you raise capital was on the public markets, and with that came accountability. And now, in the last decade, it's harder to go public. all right? New regulations post-recession. It's a heavier lift. And there's been all of this private capital just sloshing through the global markets looking for a home. And then you have this kind of flywheel of storytelling and buzz about, oh, this is the next big thing. And everyone's like, I want to get in on that. Then you're allowed in kind of relative, you're protected from the scrutiny of public markets. Does that mean that you can get away with fraud? No. Investors are right to be, calling her to account.
Warmenhoven said early investors had every opportunity to do just that.
They did nothing in terms of trying to ascertain the current status of the product or the risks to completion or anything else.
Whose fault is that?
I think it's the investor's fault. Yeah, you invest in something, you want to know how your investment is doing. And I think it's also a symptom of the founder culture that has really took hold of the Valley exactly during the time that Theranos was growing.
The first meeting I was in was with all the major investors. And they hadn't had any meetings with the company since the round had closed. And maybe an occasional phone call or something, but nothing as a group, nothing where they got a status report, which I found staggering.
And weren't demanding it?
They didn't seem to press hard before the investment, and they still didn't seem to press hard after the investment. From my viewpoint, it was really out of character for a startup investor not to be all over it. If you were a venture capitalist and you put in $100 million, you would be there every week. How are we doing? Are we on track?
So those documents do not exist.
Not in the hands of the investors. I mean, they were available internally.
Internal documents may have exposed the chasm between Theranos' aspiration and ability, though Holmes told the SEC its investor pitch left room for improvement.
We didn't intend these documents to be standalone, and sitting here now, I know we could have been much better at the way we prepared materials.
And did you talk about specifically the technology and blood draw and what was in place at that time versus what was aspirational? Was there a clear delineation between those two?
We tried to do that.
When we look at Theranos investors, many of them, not necessarily your clients, but certainly perhaps a VC fund, we would expect to be seasoned investors who can properly vet a company, a startup like Theranos.
In this case, probably what you would consider a seasoned investor like Tim Draper, perhaps Larry Ellison and Oracle, they invested early when it was just a concept. And a lot of VCs will invest even when it's not proven. Theranos got well beyond that and then started raising funds, massive amount of funds, over $700 million, from other investors.
The amounts of money that a certain class of what I call mega VCs with untold, unprecedented amounts of capital available to invest, starting with a Japanese company, SoftBank, and some of the sovereign wealth funds in the Middle East who are looking for what to do after the oil begins to peter out, are able to and are bringing amounts of money that have just never been seen before. There's no independent validation. That's what concerns me now when we look at some of these mega-funded companies like WeWork and Uber, that it hasn't been vetted as much as you would normally hope and expect from at least an independent venture capital set of players. And that adds to the board and the CEO, and here we are.
And they go dig inside the company and get the facts. Start with Channing Robertson, start with the head of engineering, and start asking questions.
In addition to Holmes, it was Channing Robertson who in 2016 gave Warmenhoven confidence to join Theranos' board, even after media and lawyers had accused Holmes of fraud.
And he had just concluded organizing two, we call it blue ribbon panels, one that looked at the science of the biochemistry inside the box, and another one looking at the mechanical nature of the box to make sure that it was all viable and doable, and they both came back very positive. So I didn't get in deep to understand how far they were from go-to-market, but I did have enough confidence that the fundamentals were sound.
He clearly thought that she was special, and when she felt like starting a company, he's the one she went to.
He was being paid quite handsomely to work for her, and had a desk in their offices. And he claimed that he didn't know about that technology. And he claimed that he didn't know about the fact that that things didn't work. He claimed he didn't know things were being run on third-party equipment. I don't know what the heck was going on with him, why he wouldn't ask these questions, why he claims to have been completely in the dark. And he's the one that brought her around, got her credibility, and was paid handsomely, annually.
One former board member reportedly did ask the hard questions. According to ABC, Avi Tevanian, software engineer and former right-hand man to Steve Jobs, was asked to resign in 2007, following his ultimatum that Holmes be replaced as CEO.
The way that startup boards are usually, they're made up of venture investors, and they're made up of other people with domain expertise. And, at the early stage, later stage, corporations may, look even more widely for people who have domain expertise in politics and statecraft. Sure, because they have domain expertise in understanding how large organizations can run and interact with the rest of the world. Something's off from the very early stage.
I would say there was a lack of scientific mentorship overall. It was the assay teams, and that was it. There was little other science guidance given to the actual scientists.
So even Channing Robertson was not interacting with your group?
No, he wasn't present as far as I could tell.
That did set Theranos apart from the very beginning, and it was a red flag to other potential venture investors in the tech and particularly the biotech space. It's a biotech company that doesn't have the personnel or the procedures in place that a biotech company would need to have even at the very beginning stage to develop product.
In 2016, Theranos finally impaneled a medical board. And under new leadership, Holmes presented a scaled-back version of its updated device, the Mini Lab, to the American Association for Clinical Chemistry.
There's clearly been a lot of interest in your company. I would argue that a lot of that comes from the fact that there were these claims that were made that were very broad early on. 70 tests, the whole panoply of lab tests from a couple drops of blood. And the evidence that you presented fell far short of that. So how should we think about that?
Well, I think we fully understand in picking this place to come to introduce it that we have a lot of work to do to engage with this community. And I can tell you, I wish that I had started earlier in the context of building the scientific and medical board that we've had the privilege to build.
Under legal pressures and burning cash, the effort would prove too late.
Should the board have looked at its own composition and said, perhaps we don't have the level of expertise that's required for a revolutionary healthcare company?
Yes, but, you're asking people to admit their own weaknesses. Let's give credit to Elizabeth Holmes. She was quite the charmer, and people just felt great and important. In their own minds, I'm sure they thought they were providing good sage counsel, but yes, of course that should be a part of the equation as well.
Stanford Medical School professor Dr. Phyllis Gardner reportedly critiqued fingerstick draws as an impossible source from which to glean accurate results for hundreds of tests. She described Theranos investors as crazy and its board members as old men whose brains had gone to their groin. Yet the suggestion that Holmes' concept was nothing more than fantasy fails to account for a flood of diagnostic startups surfacing in her wake. Take Genelite and its Maverick analyzer that's FDA approved and on its way to running more than 100 common tests from a tiny drop of blood.
Over here is our proprietary technology. So this is a machine we just got cleared from the FDA. And what it's really good at is analyzing blood proteins. Nobody else has a machine that can analyze a large number of blood proteins in 15 minutes on the whole blood in a physician setting. So that's our ambition.
The Maverick can perform much of what Holmes envisioned. The device features a proprietary optical silicon sensor that detects color changes in light when it's exposed to targeted blood molecules. For now, blood comes from a low-volume draw taken from a patient's arm. And next is the FDA's decision for the Maverick to perform about 200 common diagnostic tests from a fingerstick.
It is a politically charged topic to operate off of a fingerstick. What you'll see when we take the blood out of the tube is we're going to take a tiny fraction of 1 drop of blood. Okay. So we've validated that our machine works on less than a drop of blood. We're going to add less than a drop of blood to it.
Less than a drop?
Yeah. So it's about 4% of 1 drop that we use.
In late 2020, the Maverick was also granted emergency use authorization to diagnose SARS-CoV-2, also known as COVID-19. It's one of 28 approved coronavirus and flu tests that can all be performed from a fingerstick.
Eventually, how many tests are you hoping that Genelite will be capable of performing on one device?
That list is well under 200 tests. It's really about 100 tests comprise the vast majority of that. And there's only a few of those that we can't do. We can get to 95% of all commonly ordered tests in 15 minutes.
So what do you have to say to the critics who said Theranos' vision was science fiction?
Well, I think you just saw it happen in the other room.
So this is what the future looks like. A small sample of blood can perform hundreds of tests.
Exactly.
While not every test can be accomplished using a tiny drop of blood, the advancements show Holmes may have had the right concept and the right story without enough technology at the right time.
There's a difference between the idea and the execution, clearly. But decentralization of diagnostics and getting more data in the hands of doctors when they're making decisions is vital.
Beyond Genelite, investment in miniaturized diagnostics hardly dried up when Theranos was forced to close its doors. Similar startups have been proving the concept as anything but science fiction. There's Athelis, a Sequoia-backed in-home blood testing device, touting technology to detect white blood cell count, viral infections, and cancer from a single drop. And Truvian's portable benchtop analyzer takes 5 drops of blood to deliver multiple assays within 20 minutes. If the latest technology is living proof that Holmes' concept was sound, where exactly was her Achilles heel?
If she had dialed it back and was straightforward about using commercial analyzers and was straightforward that, this is about access, this is about getting patients' blood draw somewhere else and that kind of stuff, and said that, and we're working on our fingerstick technology, we're working on this, then, we could have gotten there, most likely.
This is an epic fail of a self-inflicted need for speed that proved to be very dangerous and fatal to the company, and we could have had an entirely different story, and on top of this, we have to do it at breakneck speed. And this was a case where literally and figuratively speed kills.
It's easy to blame the people involved. It's easy to say, oh, you investors, you should have known better. You should have looked more closely. But the hype machine is powerful. The magazine covers are powerful.
Maybe if enough people don't want to dig deep enough, because we all want to believe, we'll prop them up, we'll put them on the cover of magazines, and they can just plow forward, and maybe eventually they'll make it or maybe not. But there definitely is a public hunger for that kind of celebrity.
Nearly a year before the journal's expose, John Ioannidis published a critique of Theranos and other well-funded healthcare startups for a lack of peer-reviewed data and for keeping their intellectual property too close to the vest.
Theranos had published practically nothing. That they had a couple of papers, but they were not relevant to their technologies. So there are several unicorns out there with very high valuations, with very little or no evidence that is supported by peer-reviewed publications.
Why is peer-reviewed publication so important in your opinion?
This is how science is run. This is how we can put trust that something has merit, that something is real, that something can be scrutinized by other scientists and be proven, or at least sustain some criticism and show that, that it is relatively bulletproof.
Holmes' sleight of hand didn't go entirely unnoticed. Fortune's editorial team did note limits to their account.
Have this sentence in the original piece that was published in June of 2014. It said, Quote, precisely how Theranos accomplishes all of these amazing feats is a trade secret. So what does a journalist do from there?
It's difficult to cover proprietary technology. What do we really know about Facebook's algorithms, and how far can we go in there? Well, some of it is ultimately a trade secret.
So it's an unproven proprietary technology, particularly as it pertains to something as sensitive as healthcare, that we probably should have been more skeptical about or had more questions about, and I think it's a great lesson.
Just because someone is claiming they're doing it doesn't mean that the media and the investment community and everyone else should just believe them. And it's often harder for the media because they don't have the same amount of time or necessarily the technical depth. Whether it's the media, investors, or customers, everyone needs to do the work and make sure that what they're doing is they're getting into bed with someone who's doing a good job.
And look, it's not just the media. The media consists of the people who produce it and the people who read it, right? And then when it all comes crashing down, we rush out to buy the books, we rush out to watch the documentaries, we sort of salivate over the, look at all, what a fraud, those silly people. And so we kind of delight in the failure stories as well as the successes, and it does become hard to put it in context and see the broader facts and say, well, this was a manifestation of a bigger problem.
While Theranos' purported trade secrets were walled off from journalists and outsiders, another party, aside from investors and the board, had power to probe deeper. According to Walgreens, in March 2010, Holmes and Belwani pitched Theranos devices to Walgreens company executives as viable and consumer-ready, and said its technology had been comprehensively validated by 10 of the 15 largest pharmaceutical companies.
Do you place any blame there?
I place huge blame with Walgreens, but it's more on the negligence side. I don't believe that Walgreens knew what was going on, but they should have known what was going on. It's almost inconceivable to me that they didn't know that things were being run on third-party tests.
Somehow things got embellished. There was never any concept anywhere in reality that they could do 150 tests with one drop of blood. It was they could do different panels of tests with each with a drop of blood. Part of it was how Elizabeth talked, but part of it was what people wanted to hear. Wow, this is amazing, But the truth was, rather than getting 3 or 4 vials of blood taken, it would be a very small sample. And in fact, the sample could be normally a finger prick, and you could just get the drop of blood, let's say off your thumb or whatever, and have no need to poke a vein. So there's a lot of good things to it, but somehow the one drop of blood, that's what got put in the machine. But to do the whole panel, 150, probably would have taken 25, 30 drops of blood.
In a deposition before the SEC, Holmes admitted that Theranos had kept Walgreens in the dark over FDA concerns that the nanotainer had been underclassified. Yet she maintained the move away from fingerstick tests was no secret.
Walgreens was operating with us in the store, so they would have known locally that we were doing venipuncture, to the extent we were doing venipuncture.
Do you have a general sense of what Walgreens was concerned about following the publication of the article?
I think there were multiple issues. One was they were reacting to the press in general, but then the other was that we hadn't disclosed the engagement with FDA with them to them yet, before it was in the press.
Holmes argues that because the FDA engagement had to do only with nanotainers and because it began months and in some cases years after soliciting investors, it can have no bearing on the government's claims of fraud.
Once the Walgreens conclude we can't get this deployed in the store, from Theranos' viewpoint, they just should have said, time out. What you want to do doesn't fit our architecture, our product strategy, nothing. But that's really kind of where they took the left turn that sent them right in the ditch.
Red flags did spook world-renowned medical center Cleveland Clinic. It bailed on a partnership after Theranos left its due diligence requests ignored. And Walgreens competitor Safeway also withdrew its plans for a pilot program.
Was that the value add for Theranos? Was $140 million up front?
It got them on the map in a hurry. But the Walgreens deal gave it credibility. And so, it helped them basically raise the money they were looking for. That kind of proposal, something of that size and magnitude, should have been reviewed at the board in depth. And, there were enough people on the board to say, wait a minute, this is not us.
In deposition testimony, board member Schultz and retired U.S. Navy Admiral Gary Roughead said they did not question Holmes or anyone else at Theranos once public concerns were raised about Theranos' use of third-party technology.
The board had some very competent people and experienced people, good operating people in some ways, and they should have just called a halt. I'm not sure it was ever fully discussed at the board. And Elizabeth, as CEO, had the right to turn it down or to take it to the board.
And what about Sunny Balwani? What was his role as you understood it?
I never met Sunny. He'd been dismissed from the company before I showed up. Elizabeth was the chief architect, and she led most of the engineering program, but Sunny led all the rest of the operations.
Veterans of Silicon Valley startups know that faking it can be fair game.
Many of these companies start an idea, they think that they have it, actually they don't, but they hope that they will develop the working idea while they're pursuing it. And they have that expectation that let's go ahead and it will kind of get itself together and it will be successful. This is not fraud. I mean, this could be seen as visionary. The distinction between fraud and visionary is very subtle here.
These high-risk, high-reward gambles have been taken by some of the most famous visionaries, and even the inventor who inspired Holmes' first prototype, Thomas Edison.
He was the original fake-it-till-you-make-it guy. Now, he was different than Elizabeth Holmes in that he ultimately did make it. He was an inventor who got it right. And along the way, when he was having trouble with the incandescent light bulb, he didn't let anybody in on that. He faked demonstrations. He was not so dissimilar from other famous people in Silicon Valley, like, say, Steve Jobs, who was a notorious liar, but also a great storyteller. So she's in that tradition, and that's what makes Elizabeth Holmes interesting.
Was she an out-and-out fraud, or was she, just in the great tradition of Thomas Edison and Steve Jobs, faking it till she made it? And it could sort of be a little bit both.
She's part of a tradition of fake it till you make it, which to some extent is celebrated in Silicon Valley, but not so much when it comes to medical devices that can actually affect the health of people.
Is there a certain point with respect to Theranos where you say that's where things went wrong?
I think that there was a gradient going down the tubes, and it's hard to say which specific decision was the worst. I believe that here my response will be biased. I think the decision to move to patients was probably the worst without having something that was mature. Because once you move to patients, then you're exposing people to risk.
In pushing a soft-baked healthcare pitch, Holmes isn't alone. In its early days, Silicon Valley biotech company 23andMe was ordered by the FDA to immediately discontinue marketing its widely publicized cheek swab test, after making unsubstantiated claims that the company could identify risk levels for a number of diseases. A consumer class action lawsuit followed, and the company settled with complaining customers. Diagnostic startup Ubiome was dropped from CVS after federal investigators and an FBI raid of its San Francisco headquarters. In 2021, the company's co-founders Jessica Richman and Zachary Apt were accused by the SEC of defrauding investors and indicted by the DOJ for money laundering and securities fraud. Even the FDA and experienced megacorporations have been known to get it wrong. The International Consortium of Investigative Journalists found in 2018 that over the prior decade, 80,000 global deaths and nearly 2 million injuries were linked to faulty medical devices. Take FDA-approved vaginal mesh implanted in approximately 10 million women worldwide before the agency banned U.S. sales over risks including organ perforation, protrusion, and death. Its manufacturers, among others, Boston Scientific, Johnson & Johnson, Coloplast, and C.R. Bard. And healthcare giant Bayer was forced by the FDA to restrict sales of its permanent birth control device Essure after reported complications involving device migration and death. This widespread imprecision is evidence that as the next biotech billion is already being raised and spent, from startups to multinationals, there's much to be learned and improved.
Elizabeth Holmes was made possible by a broader culture, and her downfall and the attention given to it is also a reflection of the broader culture. You know, there still are investors out there hunting down, you know, who's the next bright young person, man or woman, who's going to have the world-changing product.
I think that we have a lot to learn from understanding what happened with Theranos, but I wouldn't like us to lose the bigger picture. The bigger picture being that there's hundreds of companies out there that may be like Theranos eventually, many of them.
How do investors who want and care about getting accurate information out of a very opaque company, where should they look?
You know, I'll tell you, all this stuff scares me. And then there's a lot of stuff in Silicon Valley, actually, technical stuff, chip companies, telecom, even medical stuff that people understand. I urge people to make sure they understand. And it's, you know, sometimes it's not 100% possible. You can make a rule with yourself, so I don't really understand it, I'm not going to invest in it.
Whether founders can back up what they boast may depend on how vigorously interested parties demand to look behind the curtain.
I mean, there are several sort of checks and balances, and it could be the press, it could be the board, it could be investors. Theranos was a case where all of those entities let down their guard because the story was so great, and they believed in the mission, and they believed that success would be around the corner until it wasn't. There's a cautionary tale to be looking a little deeper into the underlying economics. I think boards clearly have to be more vigilant than they've been.
I mean, ask if it is a secret, but 90% of the time, I think in Silicon Valley, they're going to tell you it's a secret.
Now, a lot of these biotech startup companies, their IP is very important to them and they want to protect it.
There's indeed some tension between IP and peer review disclosure. With patents, it's possible to protect IP and at the same time allow someone to disclose sufficient information.
Even with patents and peer review, biotech founders and their funders may need to take a few leaps of faith.
You always think when you start a new science project, you don't know what the unknowns are. And so that naivete of not knowing what roadblocks you're going to hit, what you're going to have to solve along the way, I think that has a long way to go with being an innovator, right? The naivete, they joke, is a really important piece of innovation.
Yeah. You need money in science. You need a lot of it. And you don't know if it's going to work, but you need guidance.
We don't want to get rid of visionary people. We don't want to get rid of people who really take a shot at a very high-risk idea. We don't want them to think that if they do that, they're just going to end up in jail. We want them to take the best shot, but we also want to have some transparency about what is being done.
Just how much transparency is demanded of future visionaries may also depend on how much light the Justice Department shines on private markets by way of Holmes and Belwani.
A lot of entrepreneurs would love to have that much money. Why do you think that Theranos chose not to just keep its head down and keep the research going?
Once you've gone public and you've got this dialogue and mantra and there's all this momentum that you have to maintain, it's very hard to turn that off and go into stealth mode again for a period of time. So there was really, that's a big part of it.
I think Elizabeth had a great big dream. I don't think there was any governors put on her, no speed limits. But that's the case with a lot of people. Some work out, some don't. She made some bad decisions too. She's not home free. But I always felt like she was fully committed to try to deliver the product and make the company successful, and to do that with all the energy she had. And she gave it her all. To a certain degree, like I said, I know people are going to laugh when they say, how is she a victim?
Do you see Elizabeth Holmes at all as a victim of this culture?
I think to some degree she is. I mean, look, she was and is so young.
There's two ways that we can look at Theranos. One way is to say that it is a bad apple and that the people involved, the CEO or whoever else, were psychopaths and bad people and they were cheating and it's all fraud and everyone else is wonderful and perfect. In a way, there's some sort of recall bias, to use a scientific term. If Elizabeth Holmes had managed to pull this off and get the technology up and running and develop something that worked, everybody would consider her a hero, the most famous person of the 21st century, probably.
If I were fired or I had to start this company over a lot of times in order to figure out how to get this right, I would, right? And I would just do the same thing over and over again.